could do onto ourselves in the United States, fiscal shock or potentially a geopolitical one. Is that what concerns you the most as well?
Yeah, so very much related to that, what I do fret, or what we do fret at PGIM, is a resurgence of inflation. So a lot of the policies that are being put forth, who knows how they'll actually play out if they can get through Congress, of course. But on the margin, it's inflationary. So what I worry about as a risk factor for 2025 is, even though we're all talking about inflation being last year's story, it resurfaces again, and that changes the whole narrative around what the Fed can do to protect the downside in the economy.
Greg, this sounds like a very personal question, but it's not. How do you sort of manifest fear, given the fact that selling isn't necessarily the way to deal with it?
Yeah, so I think the way to think about it is just your overall risk applied to the market, right? And so even though we have a pretty reasonable backdrop penciled in, soft landing, let's call it, for the U.S. economy, when we layer in valuations, there's a lot already in the price. So what that says to us is that even though we're pretty positive from an economic standpoint, you're not being rewarded for that positivity. And so we're dialing back risk. So we are, much less risked up on the spread side than we've been. And we still believe that, the Fed and interest rates and duration can come to the rescue in times of need.
Good vibes from Lisa, as always, Greg. It's good to see you. Greg Peters of PGIM.
Right.
Never change, Bramo. Never change. We often say on this program, you can learn something from the data, and you can learn something from how the market responds to the data. What have we learned from the data? That inflation's still a little sticky, that maybe possibly that upside surprise on jobless claims is down to the hurricane and will largely be temporary. What can we learn from how the market has responded to the economic data? Well, we can just look at the front end of the curve. Yields are dropping. So at the moment, the market is putting more weight on jobless claims than it is on that hot CPI data. That might fade through the day. We'll see what the session looks like. But that just speaks to this idea that still, even if you can explain away that weakness in jobless claims, Lisa, this market is still very nervy about the prospect of a pronounced weakening coming around in the labour market, even with that blowout report that we had on Friday.
To take it a step further, this is a market that believes in a one-mandate Fed that is watching jobless claims much more than inflation, and that a little tick up here or there isn't going to make a difference on CPI, but it will make a difference if you see just a little tick up in jobless claims.
We're down 2 basis points at the front end of the curve, 3.99, just a little break of 4. Small moves, no drama. We'll see if they stick. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John, just to go through those numbers again, jobless claims coming in higher than expected, CPI hotter than expected. Core CPI increased 0.3%, a touch hotter than the 0.2% expected. Headline CPI, though, is still at the slowest annual rate since early 2021, largely due to cheaper energy. Shelter and food combined accounted for over 75% of the overall monthly advance. Elsewhere, jobless claims, there was a 258,000 jump. North Carolina had a 290% increase in claims, the most of any state. Median rents have fallen in New York City for a 4th month out of the past 5. In Manhattan, the figure fell 3.4% to $4,200 in September. Those new figures come from Douglas Elliman Real Estate and Miller Samuel. Prices also slipped for Brooklyn and Queens, but even with the decline, the median rent is just $200 off the record high. The market is still fiercely competitive. Bidding wars broke out in nearly a 5th of new leases signed in Manhattan. Tesla getting ready to unveil its highly anticipated autonomous taxi prototype later tonight. The robo-taxi will be revealed at Warner Bros. Movie Studios in California, where Tesla has reportedly been collecting fresh mapping data in the lead up to the event. Tesla CEO Elon Musk is expected to outline his vision for the Tesla network, which owners can add their autonomous vehicles to a robo-taxi fleet when they're not using them. And that's your brief, John.
The future of the auto industry. Danny, appreciate it. That stock, Tesla, off the lows of April, is up by almost 70%. And the carrot over that stock, this story for most of this year.
The idea that as we get older, if somebody is so impaired after a night out, if they have children, they can just have a car come up and take them away. They don't have to own a car, just the future that you could see. Why are you laughing at me?
Because the total addressable market is bigger than just that very specific, unique story that may or may not be about you.
Hold on a second. Okay, pause. There are lots of scenarios. Think about, okay, not just that one.
I know there's lots of scenarios. Okay. That one was just very, very personal.
All right, move on.
Lisa's thinking of her nights out.
No, I really, you think that I'm just this crazy partier on weeknights? Can you imagine? Yeah, go out till 8 p.m.
Up next on the program, setting you up for the day ahead. You're watching Bloomberg TV.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're gonna get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
The opening bell about 37 minutes away. Equities near session lows on the S&P 500, down 1/3 of 1%. The calendar and the trading diary. The week ahead looks like this. At 10:30 Eastern Time, we'll get some more Fed speak for you from Barkin tomorrow. PPI and New Midge consumer sentiment, plus big bank earnings kicking off with JP Morgan and Wells Fargo. Turning the page to next week. Tuesday, more results from Bank of America, Citi, Goldman Sachs, and United Airlines. Wednesday, earnings from Morgan Stanley, and finally, an ECB decision a week away. Mike McKee, still with us around the table. Mike, you've had about 20 minutes to go over the data now. What jumps out for you?
Well, on the CPI side, the fact that housing went down. Now, CPI was raised by other things, and some of it may be related to retailers raising prices ahead of the port strike, which may fall out of the data. But it was interesting that things like new cars, used cars that had been going down went up, apparel went up, and food went up. It was only really gasoline that went down a lot. So that was kind of interesting. And I think the jobless claims is the hurricane, and that will probably remain elevated for a couple of weeks now because we've got another hurricane. So a lot of people in Florida are going to be filing jobless claims numbers. So this data probably doesn't tell the Fed a whole lot, but it is interesting because you mentioned Tom Barkin, who's a voter, speaking this morning after this data, after the jobs report data. Does he really think we need to cut rates again at the moment? And if so, only 25? That'll be this is what we'll be watching from these guys from now on.
Mike, you've been through a lot of cycles. You've seen a lot of hurricanes. How much is this really something we can just shrug off as noise versus people who actually cannot get back to work, considering different disruptions in infrastructure and the like?
Well, it's obviously a tragedy for all of those people, and it will hurt the North Carolina and other economies around there, bring down their growth rates, raise their unemployment, which raises their costs, et cetera. On a macro sense for the United States, it tends to wash out because you end up replacing older buildings with lower value with brand new buildings that cost a lot more, so GDP goes up. And we will see probably jobs in those states start to rise as construction workers and people come in. So it washes out of the national economy, but you can never put a price on what it does to the local economy.
I want to go back to food because this comes after a Quinnipiac poll came out yesterday showing Trump actually cracking some of the Democratic hold on the blue wall. And then you look at the issue like the economy, he's winning across those 3 states, Michigan, Pennsylvania, Wisconsin. What is going on when it comes to food inflation?
Well, that's a good question. When you look at the breakdown, fruits and vegetables were up almost 1%, as were meats, poultry, fish. A big issue on the campaign trail. But fruits and vegetables come in from outside the country for the most part. We see, imports of stuff that maybe because there was an anticipated shortage that the prices got raised ahead of time. We'll have to wait till next month to see.
Eggs, cats, dogs, everything. Mike, good to see you. As always, good to catch up. That wasn't lost on you. Come on.
No, it was not. Is that food at home or is that food out?
Okay. That was an easy one. Let's teeing that up. John Stolfers of Oppenheimer, Gerald Cassidy of RBC. We'll catch up with Michael Kushner of Morgan Stanley, Laura Rame of FS Investments from New York. This was Bloomberg Surveillance.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
The names that move markets are on Bloomberg.
Our role in the world, our role in NATO in supporting the Ukrainians in this war, the unprovoked war that Russia has instigated in Ukraine, our support for the Indo-Pacific, for providing a counterbalance to China. All of that is in our interest. And whoever's president, I'm sure, is going to do what's in the best interest of the United States.
It is not a time for America to back off of its commitment around the globe. And I think there's a justification for us making certain that we do the right things in a way that we share the burdens with our allies. But I don't expect America to walk away from the world in any administration. It's about American security, and it's about making certain our adversaries, present and future, know that when America's committed to something, they're there for the long haul.
Bloomberg. Context changes everything.
Futures are down after a couple of big data points. 30 minutes until the start of trading. I'm Matt Miller.
I'm Shanali Bassick.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, yields tumble after jobless claims rise more than expected, but traders are confounded by the inflation print.
And automakers are reeling from waning demand. BMW, Mercedes sales plunge in China as Stellantis eyes a management shakeup.
Plus, airline stocks slide in pre-market trading after Delta delivers a disappointing outlook. All of that and more coming up. Let's take a look at markets. 30 minutes until those bells ring. It doesn't look too pretty, of course, if you take a look at the main indexes. The S&P 500 down about 0.4%. The NASDAQ 100 also off by about 0.5%. Of course, inflation coming in a bit hotter. Claims were higher than expected, but of course, a lot of that can be chalked up to what's going on with those hurricanes. As such, you can see the bond market trying to figure out what to do. The 10-year yield currently camped out at around 407, Matt.
All right, nonetheless, we did hit a 44th record high on the S&P yesterday. That has valuations soaring. You can see investors are paying 22 times next year's expected earnings, higher than any point since the beginning of the pandemic.
But now we are back to reality, are we not? So let's look at some stocks to watch under the surface as well. We're taking a look at Delta shares falling after the airline reported profit and sales forecasts that missed Wall Street estimates, ultimately suggesting a slow recovery from the summer travel challenges. Domino's also reported earnings, trimming its 2024 projections for sales growth. Slower consumer spending hit the restaurant industry here, and you're seeing it in Domino's. We're also watching Tesla as investors eagerly await the first look at the company's fully self-driving vehicle later today. Matt, you will be out of a driving job.
Yeah, I'm going to continue to operate the vehicle myself, but I will focus in on that news. Really right now, though, it's inflation and claims that are front and center, Katie. We saw inflation rise twice as quickly as we expected it to month over month. Yeah. And the year-over-year level, it's the highest acceleration that we've seen in a year and a half for inflation. Yeah. So maybe not quite under control.
You know, it's interesting to have these dueling 8:30 a.m. releases. Of course, claims, it's noisy because of the hurricane, but still, that was the biggest jump in initial jobless claims in 3 years. And we know that the Fed has to make policy with the economy that they have. And I mean, you take a look at the labor market, obviously feeling the pain right now, but you also have inflation hotter than expected.
Guys, can we just quickly also pull up the 2-year yield this morning? Because those dueling prints, the first headline drove yields higher because of that inflation print. Then you saw those jobless claims, and there might be a lot of noise in there, but take a look at it. You just saw the bond market really react to that so quickly there. And we're back to a story where clearly the chart shows you that traders don't know which direction to head.
Well, traders, well, no, I feel like you want to own that bet now if you think the Fed is going to cut in November. Let's get over to Mike McKee to ask him to interpret this for us. He's our chief international economics and policy correspondent. So, Mike, 258,000 jobless claims. This number I haven't seen in quite a long time. And inflation up to 3.3%. That's a number we haven't seen in a year and a half.
Yeah, the inflation is a little bit harder to figure out. The jobless claims, as you say, 258,000, but that's likely due to the hurricane and the people in Georgia and North Carolina and Florida who were filing unemployment claims. We saw the unadjusted number go up by 53,000. So a significant number of people all at once filing claims. And when you look at the week prior, which is where the data comes from in terms of jobless claims, the states that had the fewest, the biggest drops in claims were Georgia, Florida, and North Carolina, and those are states where all those offices would have been closed. Now, the inflation numbers are interesting because what was going down went up, what was going up went down. Right. Other than energy and gasoline, which dropped a lot, we saw new cars, used cars go up in price. Food, which had been falling or flat for 7 months, goes up by 4/10. Food at home. So the grocery store is a problem. And you look here, this is the orange there is services. And the blue at the bottom is what I want you to notice there. It went above zero. Goods prices through food go up. And so that is really what pushed it up. Service prices, as you can see, have always been sort of higher, although shelter costs only up 3/10, which we hadn't seen in a very long time. And you wonder about the market and what they're doing. You look at what swaps are showing right now for the November meeting. 85 basis points. In other words, less than one cut for November. Now, that's a residue and hangover from last Friday, but obviously maybe the CPI numbers feed into that fear, and people aren't sure that the Fed is going to cut. We get a lot of Fed speak over today, tomorrow, and next week, so watch that.
We certainly do, and of course we had the Fed minutes yesterday. I do want to wrap that into the claims reading that we got, because we know it's very noisy, of course, with the hurricane, but going back to the Fed minutes, one of the passages in there was that many participants observed that the evaluation of labor market developments had been challenging, increased immigration, revisions to reported payroll data, possible changes in the underlying growth rate. Basically, you add it all together, it sounds like, you know, it's getting harder and harder to get a feel for the labor market, even at the policy-making level. So, I mean, I have to ask, I mean, how much concern are you hearing about the quality of the labor market data that we have?
That question has been raised directly with some Fed officials that I've spoken with, and they basically said, we look at so many different things that we're not really worried about it. We're not just looking at the non-farm payrolls, we're looking at JOLTS, we're looking at jobless claims, although this will kind of get tossed out. They're looking at all of the regional PMIs, the national PMIs, ISM numbers, and they're putting together a kind of a overall look at it. Plus, they're always talking to CEOs and leaders. I was talking with some folks from ISM yesterday, and even though labor's been down in the manufacturing level, they say the companies aren't worried about it. They're just basically not hiring at this point, but they're not letting people go. They're still anticipating that the economy will rebound.
You saw that in the Fed minutes as well. Several participants emphasizing disaggregated data and also the checks that they do with their business contacts. Mike McKee, great to talk with you. Of course, that is Bloomberg's Mike McKee. And let's keep the conversation going now with Victoria Fernandez. She is Chief Market Strategist over at Crossmark Global Investments. And so you take a look at the reaction to the data that we got so far this morning. Of course, we had claims hotter than expected, inflation hotter than expected. So you add it all together, the reaction has been to sell stocks and buy the front end. Do you agree with that?
Well, I think it is kind of a warring of these two different elements. You had the Fed say, look, inflation is under control, so we're now going to focus on the labor market. And what we saw today is, well, perhaps that's not quite true. And we've been talking about that for months with our clients going, look, we still think you can see used car prices go up because they've been coming down. I mean, I know my car insurance continues to go up and my homeowner's insurance goes up. We saw food and apparel go up. So the goods component moved higher, and I think that's going to be concerning for the Fed. At the same time, you're looking at a labor market where perhaps it's not as strong as the payroll report last week led us to believe. I know we have hurricane numbers that are wrapped into this, but there's other elements that y'all were just talking about with Mike that say, hey, wait a minute, things maybe aren't so good. Temporary hiring is down. Labor differential is getting worse and worse. Cyclical employment is coming down. So I think that tells you the Fed has a very tough choice here. I would lean towards them either taking a pause in November if we continue to see data like we saw today, or only a 25 basis point cut. The probabilities of nothing happening at the November meeting were already up to 25% yesterday. We'll see where that ends up today, but it does give you a little room in the markets to maybe pick up some extra yield in that short end of the bond market.
Victoria, how much of a risk is there that we're going to be faced with a situation where the Fed has to both deal with sticky inflation as well as a weakening labor market? How does that play out? And do you think that that's a real risk moving forward?
Sonali, I think it is a risk. You know, look, we've been talking with our clients saying we don't want to stand in the way of the momentum that we've seen in the equity market. The trend is higher. You don't want to be on the opposite side of that, but you've got to be guarded because there are these risk elements that I think the Fed is going to start to pay attention to and not live up to the expectations the market priced in. It's part of the reason that we saw yields move higher the way they did. Typically, yields move higher after a first cut, so that's par for the course, but we've had a 50 basis point move in the 10-year Treasury. We've had almost an equivalent move in the 2-year. So that's telling us that there's still some concern there. We're not sure the Fed has everything under control the way that they want to, and that is a risk. The last thing the Fed wants to do is stoke those flames of inflation, have that move higher as we head into the end of the year, and have to actually raise rates again. I don't think there's, that's going to happen at the November or the December meeting if things continue the way they are, but it is a risk that's out there along with the risk of a weakening labor market hurting the consumer.
Well, and why continue to cut? I mean, we talk about a weakening labor market because of this week's data, right? But the last jobs number was a blowout, and we're running at 3%. We hit yet another record high on the S&P 500 yesterday. Spreads are at tights. I mean, this economy looks pretty darn strong, and equity investors are paying 22 times next year's earnings. Like, that's sky high, isn't it?
It is not. It is priced for perfection at 22 times. And we have obviously earnings really kicking off tomorrow with the banks. If earnings don't live up to the expectations that the market has, you can see that coming back pretty quickly, those valuations. Again, it's a reason we're staying guarded in this market. And yes, the economy is doing okay right now, but there are some yellow flags waving. I don't want to necessarily say red flags, but there are some yellow flags. And I think it's why the Fed does need to be cautious. You say, why cut it all? I think that should be part of their discussion. We saw in the minutes from the last meeting, not everyone was completely on board with the 50 basis point cut. I think you're going to see even more of that coming. There is this bifurcation going on in the market, and you see it on consumer spending. You see it on earnings. You see it on employment. You see it in production, in CapEx. Different parts of the market are doing okay, whereas other parts of the market are really suffering. I think that means the Fed needs to really take its time.
And just quickly, Victoria, put this into a portfolio. You mentioned that, you have some caution at this stage. Where does that lead you when you take a look, of course, at the sector level, at the industry level, about where you want to be right now?
Right. So obviously we want to be invested in the market. Like I said, you want to take advantage of the momentum that we're seeing there. But look at some of the new areas that have actually taken some leadership. Some of your industrials, financials are holding in because you see a yield curve that is steepening again. I think you can actually look at some of the staples or healthcare names, more of those defensive names that have come back over the last week. Pick up a little bit there, but I would add some fixed income allocation and some dividend income oriented allocations to your portfolio to buffer any equity market volatility that could come.
All right, so income through bonds and through dividends. Cross marks, Victoria Fernandez, always great to speak with you. Appreciate it. Meanwhile, let's take a check on these futures, of course. Less than 20 minutes until the bells ring, and we have a sea of red. You take a look at the S&P 500, the NASDAQ 100, both feeling the pinch, but in a big way, it's the small caps leading the decline. The Russell 2000 currently off by about 1%. Meanwhile, let's take a look under the hood right now. We'll do that with Abigail Doolittle.
Separate from the overall pressure that we have on stocks right now, Katie, we do have some stocks here under pressure for idiosyncratic reasons. Starting off with the shares of PayPal, down nearly 3%. This as Bernstein cuts shares to a market perform from an outperform, saying that the company's core button, that its pricing is more expensive than its competitors. So there could be competitive pressures in addition to interest rate concerns. We also have the shares of Pfizer lower. Two executives, former executives, have actually 10 times genomics, down 28%. And this as they put up a disappointing quarter, missing both earnings and revenue estimates. there is a 7% bear short interest. The stock on the year already down 63%. Shonali, it seems as though a lot of these DNA testing companies, they had a limited population of people who wanted to participate, and now tougher moves ahead. And then here's Pfizer, down more than 1%. Two former executives saying that they don't want to be a part of Starboard Value's turnaround efforts. Investors responding negatively, Shonali, to that news.
Abigail, thank you so much for keeping an eye on all of it for us. Now, coming up, we're going to talk about Hurricane Milton, moving off Florida's coast after cutting a path of destruction. We're going to bring you the latest. This is Bloomberg.
Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, is emissions.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
The top names in business are on Bloomberg.
The challenge for us now is not very much on the product, it's on the ramp-up of the production system.
We turned the industry down to almost zero during the pandemic. And what we're trying to do now is turn it all the way back on. And that's hard. We lost not only people during the pandemic, we lost a tremendous amount of experience.
A lot of skilled people have left the industry. We have to hire new people. The supply chain has to hire new resources and train the people, educate them.
And because those roles are filled now not by a 58-year-old, but perhaps by a 28-year-old, there's a lot we have to do in terms of not only adding capacity, but capability to meet the ramp that we all are embarked upon.
We have thousands of suppliers, and when you have just a couple of them, few of them that are late on the ramp-up, well, that's slowing down everybody, and that's what we've been facing earlier this year.
Nobody covers business like Bloomberg. Context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
As we spend some time here on the broader presidential race,
let's focus in on European politics.
Makes you wonder how politics might play out.
Let's get now to high interest to look at what's making headlines around the world. More than 3 million residents in Florida are without power after Hurricane Milton cut a destructive path across the state overnight. Airport operations are still impacted. Flooding emergencies remain in effect, and authorities are assessing the damage even as the heavy rains and searing winds continue to lash the region. The storm even ripped the roof off of the Tropicana Field Stadium, home of the Tampa Bay Rays. 7 & I will change its name to 7-Eleven, and the company is planning to split into two as part of an overhaul to fend off takeover advances from Couche-Tard. The Japanese retailer cut its operating profit outlook in its latest results. 7 & I's CEO said the plan was to speed up transformation as investors begin warming up to the Canadian company's $47 billion offer for the Japanese convenience store operator. And one of the greatest tennis players in history is calling it quits. Rafael Nadal announced he will be retiring at the end of the season in a post on X. Nicknamed the King of Clay, the Spanish icon won a record 14 French Open titles alongside 8 other Grand Slams, including 5 U.S. Opens, as well as an Olympic gold medal. Nadal will play for Spain in his final match in the Davis Cup next month.
Now we're going to check back in on those shares of Delta. The airline's profit and sales forecast falling short of estimates, despite the CEO saying holiday travel demand looks very strong. Let's discuss it with Bloomberg's global aviation editor, Benedict Campbell. You look at what sorry about that, Benedict. If you look at the kind of oversupply picture in the United States, I mean, how does Delta's earnings fall into this, and how does the outlook really pair with what analysts and other investors expect?
Yeah, so the oversupply picture has improved, actually. This is something that was more pronounced a couple of months ago when there was really a lot of capacity that was pumped into the market, and that really had an effect on prices that came down. That seems to be more under control now. In fact, September looked pretty good. We heard from Ed Bastian, the CEO of Delta, a short while ago, and he said that, you know, the business in September, both domestic and transatlantic, has turned positive. So that's on the good side. The issue is this is a stock that's actually done reasonably well so far this year. So sort of what your previous guest was saying, when you have shares that have done well and you have a sentiment out there that is positive, and then a company doesn't deliver right the way that people expected, they get punished. So there's a bit of a damper there on the stock today. There's nothing fundamentally wrong with the outlook. It's a little bit soft, both on the earnings and on the sales side, but probably people were hoping for a little bit more, and that's what you get in the stock reaction.
Exactly. That's what priced for perfection means. Benny, they are still, though, having the issue that fares are dropping and wages are rising. It's an industry-wide issue, right? In terms of fares, when are these airlines going to get pricing power back, or what do they need to do to get some pricing power back?
Well, they are doing it already. They are taking that capacity out of the market. There was probably sort of over exuberance in the market. The long sort of revenge travel period, that has come to an end, and now they are a lot more disciplined. So that will feed through to prices. We will see some positive improvement there. And again, the company said that Thanksgiving's looking good. The holiday season and Christmas, that's all looking good. On the other hand, you've got a bit of choppiness that's sort of baked into this. I thought it was interesting that he said the election will actually play a negative role. People don't like uncertainty, and they might travel less, and that's something that they can see in their forward bookings for October.
Well, that's where I wanted to go, because I can't imagine delaying a trip somewhere because of the election. Am I just not being creative enough, or does this sound like an excuse?
You never quite know. Sometimes companies are slightly creative when it comes to sort of explaining away their shortfalls. This could be one of them. We also don't have a very good comparison, because you have to remember last time we had an election in 2020, we had COVID. So again, any travel swings weren't as pronounced because basically people weren't traveling. And in 2016, maybe there wasn't as much uncertainty in terms of the result of the election, but the company claims that they have the data. It shows that indeed people are traveling less, they want to stay at home, and if we get clear results, maybe that will be just a flash in the pan and it'll disappear quickly. But if we enter a pronounced period of political uncertainty, then maybe people will think twice about what they want to spend, where they want to go. So that's something we'll have to watch.
All right, who knows? Remains to be seen. Benedict Campbell, really appreciate you talking about Delta earnings. Of course, Delta down about 1% pre-market. Now, coming up, Home Depot is requiring its corporate employees to do 8-hour shifts at its retail stores. We'll have the details in Social Climbers next. This is Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
All right, it's time now for Social Climbers. Companies making waves this morning. And first up, we have Amazon adding Apple's TV Plus streaming service to its channels, offering hits such as Ted Lasso in its video supermarket for the first time. Meanwhile, Apple will start selling TV Plus subscriptions through Prime later this month. Next up, Walt Disney increasing ticket prices for its 2 Southern California theme parks by about 6% on most days, effective immediately. That pushes the highest cost for a single day ticket over $200 for the first time. And finally, Home Depot will begin requiring corporate employees to work a full day at one of its stores every single quarter. The DIY home improvement retailer says that the move is aimed at supporting its retail staff. Meanwhile, let's take a check on these markets, of course. You can see that it's not too pretty of a picture. The S&P 500 currently off by about 0.3%, a little bit more if you take a look at big tech, off by about 0.5%, of course, after that hotter than expected CPI reading. But of course, it's hitting the smallest companies the hardest. You have the Russell 2000 currently off by about 1%. We'll see how that market opens in just about 4 minutes until the opening bell. We'll, of course, discuss that and bring you through it all. This is Bloomberg.
Make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo pet products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that you know most households where most of the dollars go against the pet, but treating. And then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. It appears today that bad news is bad news for the equity markets. You can see S&P futures down 0.3%, NASDAQ futures off 0.5% after inflation came in hotter than expected and initial jobless claims came in bigger than expected. The opening bells ringing down at the New York Stock Exchange as well as the NASDAQ marketplace. We've got a charity fundraiser here at the New York Stock Exchange. Look at Pete. Great to see those guys. And down at the NASDAQ marketplace, you've got Intelligent Alpha ringing the bell. So let's take a look at what's going on after those 2 big data points came in. Obviously, markets are lower, but Katie Greifeld is here to tell us exactly how much in the first 30 seconds of trading. Katie?
Yeah, Matt, we had our 44th record close yesterday for the S&P 500, at least as it stands right now. Of course, 30 seconds into the trading day, we're not going to get there. Currently off by about 0.3% if you take a look at the S&P 500. A little bit worse if you take a look at the NASDAQ 100, your big tech names, currently off by about 0.5% after that hot inflation, and even more so if you take a look at your small caps. The Russell 2000 currently lower by about 1%. Meanwhile, let's take a look under the hood. We've been talking about Delta's outlook, which disappointed Wall Street, despite CEO Ed Bastian saying that demand for holiday travel looks strong. He also said that he expects some uncertainty and weakness around the election. I don't know if I quite buy that, Shanali, but stock currently up about 0.5%.
You also have Domino's, Katie, taking a little bit of a lift pre-market in the market open, up more than 1%. Interesting. That's even as Domino's expects annual global sales growth below its long-term target of 7% or more. It also cut its outlook for net store openings through the end of the year. Pizzaflation, Matt. Not a good joke? Okay.
I like it. You know what I was thinking? You know, back in the day, a couple of guys paid 10,000 Bitcoin for 2 pizzas.
Yes.
Which would be worth about $60 billion.
Is that the worst trade ever? I don't know.
Yeah. It has to be up there with the worst trades ever. All right, today, Tesla will unveil its fully self-driving vehicle. Shares are up about 70% since April, when Musk pivoted the company to a focus on AI. More on that in a moment, but we continue to see record after record close for the S&P 500 this year, 44 to be exact. Let's take a closer look with Bloomberg's Abigail Doolittle. Abby?
Yeah, we may have losses on the day, but we do have big gains on the year. And in fact, sector-wise for the S&P 500 coming into today, 44 record highs, as Katie was talking about. Lots of stocks trading higher, including Vistra and NVIDIA. But from a sector perspective, you can see technology up 32%, communications up about 28%, and then utilities up 24%. And what makes this really interesting is the fact that, of course, utilities, because of the AI craze, getting this big boost. On bottom, real estate, but still up a healthy 8%, energy up 10.1%. So again, a very strong year. Now, relative to some of those big movers on the year, if we take a look at what's happening here, Vistra, that is the top stock, up 222%. Again, a utility company, of course, benefiting from the fact that yields are lower, so those dividends look more attractive. But it also, again, has to do with the idea of boosting AI, the craze, the demand, boosting utilities, energy use, that helping also, of course, NVIDIA. That would have been the stock one that many people probably would think was the top stock on the year, up a very healthy 166%, recovering off of those lows. Palantir and Constellation Energy are some of the other big stocks. Now, if we put all this into perspective, Katie, and take a look at the record highs in the S&P 500, here is the big gain over a long time period, going all the way back to 1960. It really puts into perspective the tech bubble and then the housing crisis bubble, really smoothed out here on this chart. But take a look at the record highs, up 44 right now. The next biggest is back in 2021, where we had 70, and then 1995, 77. So I don't believe mathematically, no, I guess we can. Mathematically, I think we can still get to both of those. Let's see how the year rounds out.
All right, you gotta believe. Abigail Doolittle, thank you so much. Meanwhile, let's broaden out this conversation with Jose Rasco. He is CIO for the Americas at HSBC Private Banking and Wealth Management. Great to see you on set with us.
Thank you. Thank you for having me.
So I want to get to earnings. Of course, we're on the cusp of earnings with the big banks setting the stage. But I want to first talk about the data that we got this morning. Of course, the claims data was noisy, but we did see a weakening labor market, and we saw hotter than expected CPI. You think about how much of this rally has been fueled by the Federal Reserve and its easing trajectory. How big of a fly in the ointment is this?
I mean, you know, clearly the rhetoric's going to go from stagflation to soft landing to no landing, and now we're going to have an overheating economy story percolating through the markets. I think it's a bit of a tempest in a teapot. The direction for the CPI is still downward from our perspective. 2% target means a symmetric rate 1.5 to 2.5, and I think we're still in that range. It's not going to be a straight line to the bottom. Yes, now we have concerns. Energy, for example. I mean, you know, Abigail just talked about the demand for energy. If you look at independent power producers, that subsector has soared in the last 60 days, right? And valuations still look great. So we think there are pockets of this that still make sense from the energy matrix, but in looking at an inflation accelerating story doesn't make sense. So from an earnings perspective, we like the market.
But more on the S word, stagflation.
Yeah.
How do you think the market is really accounting for the risks that that's what we might see?
We think that's de minimis. I mean, we actually think, I would say, to continue the airline or airport metaphor here, rather than a soft landing or no landing, let's call it a touch and go landing, right? And so we think we're going to see the economy slow. But remember, it's not just a cyclical story. It is also the secular. Abigail talked about the greatest year we've seen since this year, before this year, 2021, in terms of all-time highs. What was happening in 2021? Fed funds were going down. We think we're going to see the same this year into next year. That's very accretive to earnings. And if you have stable inflation, which means it's in a range, right? Not flat, but in a range, and you have good growth, that's positive for equities.
Right. I think the employment data doesn't seem noisy to me. It's loud and clear that the big boost came out of North Carolina and Florida. I get what you mean by that.
You just saw the headline. You have to click into
true.
eCan Go on your terminal.
That's what I wanted to bring. So Michael McDonough sent over an eCan screen. This is a fantastic function on the Bloomberg.
It's like on your speed dial.
He is. I follow him. You can follow people on the Bloomberg terminal. So I follow Michael. Check this out. You can see it. Well, I would make it a little bit smaller in terms of the range, like look at it for 6 months. And if you can click on that in the control room, there you go.
Right, loading.
You can see the blue here and the red. North Carolina and Florida grew substantially after the hurricane, obviously. So my point is the labor market looks pretty healthy, right? Corporate earnings look pretty healthy. Asset prices look pretty healthy. And inflation really is climbing back up. So why aren't you worried about...
I would argue that point.
So we've seen the biggest climb year over year in a year and a half, right? I mean...
Talking about like 0.1% though, right?
No, 3.3%. We haven't seen 3.3%.
From 3.2, I mean, so that's number one. Number two, companies are more profitable. If you look at the FactSet did a great study where they looked at second quarter earnings. 40% of companies in the first half of the year, both first and second quarter, said AI was contributing to lower costs and raise revenue. That's profitability, Matt. So I think that's what we're focused on. It's a growth story. And don't focus just on the cyclical. We have tried to incorporate the secular themes of nearshoring, reindustrialization of the U.S., the tech revolution, innovation in healthcare. Look at AI in healthcare. Look at all the things going on in terms of billing and bed costs and all this for hospitals, the insurance business. What's happening here is truly revolutionary. And it's not going to make major headlines, but you're going to see costs, COGS, the cost of goods sold, right? That is going to be controlled, and you're going to see new revenue opportunities pop up. So we're still, I hear what you're saying. There is the risk of inflation, but in a slowing economy, that's hard. Remember,
by the way, do you worry about if Donald Trump wins and we, mass deportations, 10, 15 million out of the labor force, right? 60% tariffs on everything from China, so a huge spike in prices. Taxes continue to be cut. I'm not complaining about that, but it's inflationary, right?
Did you buy gold or something?
No, I'm just wondering, are you concerned about that? And, especially if then we start breaking up our own national champions like Google, like it doesn't look good.
You can't, well, that's not a Trump thing. That's a congressional thing, right? What's going on with tech and breaking up of monopoly power and all that. That's going to be there regardless of who's in the White House, right? But I think if you look at that reflation trade story, you have to also factor in one thing, which is the secular theme of tech deflation is not yet factored in fully into the market, I don't think. And that is still to come. And we saw this in the 90s.
Right.
And in the 90s, everybody talked about, well, the economy's reaccelerating, Fed is cutting rates. Oh my God, inflation. And all of a sudden, wait a minute. And I don't know about you, I'm an insomniac. I watch late night TV, and some of it's pretty bad, right? So you guys should be on late night. But if you watch late night TV, there's discounting all over the place.
I think we're more made for late night, for what it's worth.
Well, before we let you go, and not to agree with Matt too much here, but let's talk about valuations, because you've made the point that you take a look at valuations on this S&P 500. They're pretty high right now, highest since the pandemic. How much do you factor in valuations when you take a look at this upcoming earnings season? Because many people have made the point to us that we're pretty much priced for perfection right now.
You could make that argument. But if you look, we've looked at bull markets, we've looked at economic cycles, and we've also looked at valuation cycles. And if you look at valuation cycles for the S&P and for the tech sector, this is middle of the road. This is not excessive. It is not cheap, but it is not excessive. We are not at the point where you should be waving the white flag and saying, everybody back up the truck and sell. We're nowhere near that. And the good news is in this cycle, as opposed to 94, 95, in 94, 95, multiples soared because companies were priced high and they made no money. Today, those companies that have good value, you should see tech valuations soar meaningfully for the broader tech market, and that's what's coming. That's what gives us a broader market.
So the fundamentals justify the valuations.
I mean, they're not cheap, but look around the world. Where are you going to put your money? We do this every day, and every day everybody complains to me about valuations in the U.S. market, and I go, okay, great. Where are we going to put it?
Well, we start tomorrow, don't we, with J.P. Morgan trading at 2 times its book value. Matthew, let's see if that valuation is justified. We'll set off the rest of the market. Jose Rasco, we thank you so very much, of HSBC Private Banking and Wealth Management. Now, coming up, the CEO of Stellantis planning a big management shakeup amid profit concerns. More on the latest auto news next. This is Bloomberg.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in?
I'm in.
I'm in.
We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show. Weekdays around the world right here on Bloomberg. Context changes everything.
All right, it's time now for top calls. Some of the analyst action in focus this morning. And first up, Truist upgrading Nike to a buy. The firm says that the sportswear giant is moving in the right direction with the return of company veterans, including Elliott Hill as CEO. He starts on Monday. Next up, CFRA says that Lululemon no longer a buy, downgrading the company to a hold. Analysts over there say that shares are due for consolidation. And finally, we have JP Morgan raising AIG to a buy. The analyst says that the bullish view on the stock reflects its outsized EPS growth and attractive valuation, Matt.
All right, interesting stuff there. I want to get to cars. The board at Stellantis is meeting to discuss the future of CEO Carlos Tavares this week. It comes as Tavares is planning reportedly a sweeping management shakeup in response to the company's disastrous profit warning. This according to a source. Let's discuss with Bloomberg's auto czar, Craig Trudell. He sits in London. And Craig, you know, I was looking at the shares of Stellantis. They had been winning in terms of, you know, all of the incumbent automakers this year. And now they are the biggest loser, dropping 55% peak to trough. What can Tavares do?
Yeah, this has really been a stunning few months for this company because I think, you know, up to even, you know, early this year, it was really, you know, an automaker that was firing, right? And you know, the reputation of Tavares was as, you know, a real sort of, you know, executor, the ability to combine these two companies as he was able to, you know, say combine Opel when he was running PSA. So, you know, he has, unfortunately, I think, you know, for skeptics of this company, you know, sort of resorted to more cutting in the face of, you know, signs that maybe what this company actually needs is product, right? And so can he prove himself as a product guy more so than just, you know, an operator? And I think that's the big sort of open question here.
And just to focus on the Palace intrigue for a little bit longer, what about Tavares's own future? Because, of course, you've reported that board members are also expected to discuss his future during the two-day meeting. Of course, Bloomberg has reported that the chairman has started looking for a successor to Tavares, whose contract ends in early 2026. Is it possible that he goes before then?
I think it's unlikely that we would see him get the push, especially just at this juncture. I think, you know, one of the things that makes Stellantis so fascinating is it's kind of like running the UN in the sense that, you know, you have, you know, very, very strong interests of the Italians, of the French, of the Americans. It's a company that is really complex, and this is going to be a really difficult succession search if you're John Elkann. And so, whether or not they would be able to quickly sort of pivot to a new leader when they have Tavares under contract for a good while longer now, I think it would be a real shock and would not necessarily inspire a whole lot of confidence in the company at a time when, morale is already quite low.
I wonder about General Motors. I was looking at the fact that that company's stock has dominated automakers. It's the only one of the big incumbents that hasn't fallen this year. It's doing very well. However, General Motors and Ford have the lowest valuations in terms of enterprise value to operating profit of any company on the S&P 500, and there are 503 companies on that index. Our own Joel Levington from Bloomberg Intelligence makes the argument that they have enough cash left over to buy 40% of their shares. Is it potential that we see a share buyback coming from GM?
Well, I think that's actually part of what's driven such a strong year for Mary Barra is the fact that, around this time last year, this was a company that was really struggling with its investments in electric vehicles and robo-taxis. We had a really ugly incident with Cruise, their self-driving vehicle unit. And she really made a sort of, huge decision late in 2023 to put off some of the electric vehicle projects that they had, both vehicles themselves and batteries that went into them. She's really made some dramatic moves in bringing in new leadership of the battery business, and she's taken quite a bit of money off the table for Cruise to go through and really sort of honed in on what this company does best, which is make big pickups and SUVs that they make a lot of money off of. And in the meantime, they were going to buy back shares and really, do a significant amount of returning to shareholders. And that really kind of touched off a bit of a trend in the industry where others had to follow suit. I do think that Joel's analysis is spot on, that there may be more to buy in the near future.
All right, Craig, unfortunately, we got to leave it there. Really appreciate your reporting. That is Bloomberg car czar, Craig Trudell. Now, coming up, FTC Chair Lena Khan says that there's a lot more work left to do, even as major Democratic donors call for her ouster. That's next in our Wall Street Beat. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
DOJ or other authorities
could face bigger challenges next.
Was going to keep winning World Cup. This is a three.
As the economic picture
Covering the intersections of Hollywood, Silicon Valley, and beyond.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Welcome back to Bloomberg Open Interest. Let's take a check on stocks. About 20 minutes into the U.S. trading day, you can see we're still down, of course, 44 record closes as of yesterday now. Taking a bit of a breather after that hot CPI. The S&P 500 off 0.3%, and it gets worse as you go down. The NASDAQ 100 off about 0.6%. Those small caps, Shanali, off by 1.3%.
It's time now, Katie, for the Wall Street Beat. We're going to talk about a highly watched person in Washington, Lina Khan. She's been chair of the FTC for 3 years, and in that time, she's toughened merger oversight, taken on non-competes, and she's driven the donor class crazy by hitting their pocketbooks. She hints that there's more to come if she gets another term, and Khan is the subject of today's Big Take. Bloomberg Businessweek's Mac Chapkin co-wrote the story, joins us now. Curious about this, because yes, there are clearly large billionaire donors that are very frustrated with her. More and more under the surface, though, I've heard a couple people on Wall Street even say that that criticism is even too harsh. I'm wondering if it's because they think that's just the reality.
Well, Lina Khan is an interesting figure because she sort of cuts across partisan divides. You know, she's very popular with members of the squad. You know, AOC is a big Lina Khan fan. A bunch of the progressive Democrats are. You also see in certain industries that are concerned about certain kinds of consolidations, they like her. And also on the Republican side, you know, J.D. Vance, some of these kind of new right figures, the younger, very conservative figures, also like Lina Khan. So she's an interesting case because in certain ways she shows the way that the kind of like traditional kind of corporate consensus has kind of lost some purchase in Washington on both sides of the aisle.
So you mentioned AOC. Let's take this to social media. Of course, she posted on X yesterday, anyone goes near Lina Khan and there will be an out-and-out brawl. And that is a promise. She proves this admin fights for working people. It would be terrible leadership to remove her. That's a direct quote. Pretty powerful language there, I would say, but it sort of speaks to what you were saying, the depth of the support that Lina Khan has with certain members of Congress.
Yes, responding to Mark Cuban, I believe, who also made some comments to us for this story. He is kind of a mixed take on Lina Khan, but like many people who are connected to the tech industry, feels like she's really hurt kind of the market for M&A. He's worried about AI, over-regulation of AI, and AOC, of course, promising, you know, not to go down easy.
Well, to that end, too, the reason Mark Cuban likes her is because of the pharmacy benefit managers. That's his business that he's after. She's after it in a big way. Does she help little tech in any way? How does the tech industry feel about her?
So there are questions. I mean, I think there are questions about how significant little tech is, but there is, as you say, Shanali, a movement among a handful of investors, most notably Y Combinator and Andreessen Horowitz, to sort of point out that Google, Amazon, Apple, they are making it harder for certain kinds of businesses to get off the ground. And this group, especially led by the kind of Y Combinator folks and a handful of others, are basically saying this is great. We need to rein in Google, we need to rein in Apple, we need to rein in Amazon. And so they are celebrating Lina Khan and attempting, I think, to create a little bit of momentum on the other side so that it isn't just a bunch of rich guys yelling at her, some supporting her. Max, great to have you on the program. Recommend everybody read your big take on the Bloomberg Terminal or on Bloomberg.com. Max Chapkin there from Bloomberg Businessweek. Now, coming up in the next hour, Nouriel Roubini joins us to talk about the economy and give us his thoughts as well on 20-year Treasury bills. We're going to talk about the activist Treasury issuance theory. Then KBW's CEO joins us ahead of bank earnings tomorrow. This could be the big one, folks. This is Bloomberg.
prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, good Thursday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are also streaming live on YouTube, so you can head over to youtube.com, search Bloomberg Live Radio, and that's where you'll find us. We're going to kick off this hour getting the latest on the hurricane. Rob Carolan, Bloomberg meteorologist, on the latest developments with Hurricane Milton. We're going to follow up with that with Ken Johnson. He's the Walker Family Chair of Real Estate at the University of Mississippi. Get his thoughts on Hurricane Milton's impact on Florida housing. Lindsay Pehig is a chief economist at Stifel. She's also going to join us here to give us her thoughts on that inflation print we saw today. Vince Piazza, Bloomberg Intelligence Senior Equity Research Analyst. He covers all the energy stuff. And he's going to give us his thoughts on the impact of Hurricane Milton on the oil and gas industry. I'm just going to give that to Alex, and she's just going to roll with it because it's energy, so we got that coming up. But first, let's go to John Tucker and get a Bloomberg Business Flash.
Hi, Paul and Alex. We are being brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest at ibkr.com/RIA. Major stock averages lower to little change. You have 6 of the 11 major industry groups in the S&P 500 down. The biggest drag right now coming from industrials and utilities, the best performer. The Dow Jones Industrial average 82 points lower. That's down 0.2%. S&P 500 is 13 points lower, down about 0.25%. And the Nasdaq Composite Index 52 points lower. That's down 0.3%. The underlying U.S. inflation data rising more than forecast in September. So that represents a pause in the recent progress toward moderating price pressures. The so-called core consumer price index that increased 0.3% from August and 3.3% from a year ago. Shelter and food combined, they accounted for over 75% of the overall monthly advance. advance. Meantime, we also had data on the jobs market. Applications for U.S. unemployment benefits rising last week to the highest in over a year. And that's what the bond market seems to be focused on. A 2-year yield, which is more policy reactive, that's down about 5 basis points. That is under 4.397. The 10-year unchanged, 4.07%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Alex.
Hey guys. Good
Hi,
morning.
Alex.
Happy Thursday.
Yeah,
Happy Friday Eve. It's a day. Alex Steele, Paul Sweeney, John Tucker, Bloomberg Intelligence Radio. I want to get you more on Hurricane Milton. Here's the latest. 3 million people still without power. Governor Ron DeSantis saying that the state has avoided, quote, the worst case scenario. Milton's now moving out into the Atlantic as a Category 1 hurricane. Flooding emergencies remain in effect. We do want to set you up with the latest. Here's Rob Carolyn, Bloomberg meteorologist, on the latest developments with Hurricane Milton. Hey, Rob, what is the state of play right now?
It's getting better, Alex. The storm is continuing to move away from the Florida coast. It's now over 100 miles east of Cape Canaveral. The winds along the Florida coast continue to drop off. We're now just seeing some gusts in northeastern Florida over 40 miles an hour. Certainly can see a reflection of that power being out to more than 3 million people in the data. There's so many locations around Florida now not reporting weather data because the power is out to the station, so they can't take it. But the good news is the rain is almost over. We've just got now some scattered showers from Jacksonville along I-95 all the way down towards Melbourne. That's about it for precipitation. So from here on out, it should start getting much, much better across the entire peninsula.
Rob, I'm just recently looking at some amazing footage of Tropicana Field and how that entire roof was just really torn right off of that. Now, granted, that's a terrible place to watch a baseball game, but that's a real shame for there. But talk to us about Tampa and kind of how it was impacted or maybe missed a little bit.
Well, the good news is it did miss a bit. Our big concern yesterday was where exactly was the eye going to cross the coast. We mentioned that if it went somewhere between Bradenton and Port Charlotte, that would be a good scenario for Tampa in regards to storm surge. That's what happened. Lido Key is where the eye went overhead at about 8:30 last evening. So the winds blew the water out of Tampa Bay. The Tampa Bay area immediately was not affected by a huge storm surge. Where the storm surge was bad was south of Tampa. I've seen reports from Sarasota southward of about a 10-foot storm surge. In northeastern Florida this morning, we've had a storm surge of about 3 to 6 feet. The really good news was the storm certainly weakened just before it went inland, and that has resulted in winds not being quite as high, especially away from the coast. I've seen numerous reports of gusts over 100 miles an hour last night around Sarasota and other areas in west central Florida as it went inland, but only about a 74-mile-an-hour gust last night at MCO. And as you look at the gusts along the east coast of Florida in the early morning hours of this morning, most places were gusting to about 75 or 80 miles an hour, and that's certainly below what it could have been had the storm been a little bit stronger as it went inland.
All right, Rob, thank you so much for your reporting over the last several days, really over the last couple of weeks here with all the hurricane activity. Rob Carolyn, Bloomberg meteorologist, giving us the latest on Hurricane Milton. Let's get back to the markets here. Got a little bit of red on the screen, not much here, but let's see where the action is under the hood. We can do that with Nora Melinda. She is the equities reporter for Bloomberg News, and she joins us here in our New York City studio. Nora, what are you looking at?
Well, keeping an eye and continuing that conversation about the hurricane, I'm still keeping an eye on insurance stocks. So we are seeing them rally this morning after we did see expectations of Hurricane Milton being super extreme, paring back a little bit. So we are seeing a rally more broadly across that sector. But I'm also keeping an eye on a lot of stocks that create generators. So they are currently lower, but if it does have the potential for multiple outages, that could be
continuous.
Yeah, it could be a tailwind for them. Let's hope that that's not the case, though.
Sure. Yeah, of course. I was also interesting in like Mosaic is a top performing stock in the S&P, for example. Like, why? You know, they make fertilizer. There's a lot of fertilizer plants and production in Florida, so it could be a price thing there. So it's all those little intricate ways of looking at how to manage a storm in the equity market. No pun intended. Delta Airlines, they reported, we knew there were going to be issues because of the CrowdStrike Microsoft issue and outage, but it seemed like it was a little more than that.
Exactly. I mean, I think that a lot of people are coming in thinking about CrowdStrike more broadly, especially as we're thinking a lot about these travel stocks. But we are seeing shares of Delta lower in trading. But one thing to note is that the stock is trading ex-dividend today. So something to keep in mind as you're looking at percentages. But right now we have shares down about roughly 2%. And this is after the company issued fourth quarter sales and profit forecasts that fell short of Wall Street estimates, but really they were looking at the summer in which there was an oversupply of U.S. flight capacity that left many carriers scrambling to cut ticket prices and also pull back flying plans. So that has really weighed on the stock, and a lot of people are looking at Delta to see how it will move forward in addition to a lot of its competitors here.
So I guess the post-pandemic travel surge, that's played out, I guess.
Apparently so.
Airlines. So now we're getting back to, I guess, more normalized activity, normalized, then I guess all the airlines had to adjust their fleets and their capacity and
But
all
he
that
did
stuff.
say that the holiday season still looks good. I was just surprised that do people really not travel because of U.S. elections?
I was about to bring that up.
Apparently that's true. He
I've
goes
never
back
heard that before.
for years, but I don't get
and
it.
as I've been listening to the commentary today, it's interesting. You know, companies throw out things all the time, little things just to brace in case there are some things that miss expectations. So I'm curious how much the election really plays. Personally, I don't think I would decide whether or not I'm flying based on who's elected into office, but that is something that they do call out in terms of thinking about
next week, Alex and I are doing a remote from Kiawah Island, Florida. You're flying to Charleston.
Wait,
so now
what? You're
John,
going
you didn't
away.
get that no invite to John?
Didn't get that invite.
I didn't get my...
Check your spam. I might be in your spam there, John.
Next time.
We do miss you when you're not there.
But I'll be flying Delta down there for the first time in like a million years. I don't fly Delta. So I'll report back.
Please do.
Okay, I'll report
Please
back.
do.
Flying out of LaGuardia. All right, we'll see how that goes. All right, anything else, Nora?
I mean, I'm just keeping an eye on Tesla. Of course, we have the big event later today with the unveiling of the robotaxi, which we know will be the company's first fully self-driving vehicle. So definitely interesting to see how Tesla will react, especially this is a very high-stakes event for the company that some people think has fallen from grace.
All right, Nora, thanks a lot. Really appreciate it. Nora Melinda joining us, Bloomberg Equities reporter. Let's stay on the Hurricane Milton track. Of course, there were reports of tornadoes also pummeling through the state as well. Let's take a look on the impact on the housing market. Ken Johnson is Walker Family Chair of Real Estate at the University of Mississippi. Ken, it's great to get your perspective on this. How do we know what the full damage is to, say, the housing market? How long does that assessment take?
So we can make some upfront estimations, but we probably won't know the full results, quite honestly, for a couple of years. Using Ian as a test case, we're still recovering. South Florida, that is still recovering. Southwest Florida from Ian. This appears to be less in scope, so we're probably still looking at several months before we've completely gotten rid of Hurricane Milton.
Talk to us about I don't know, you think about owning real estate in Florida, boy, that is not for the faint of heart here. Because talk to us just about, I don't know, insurance and how this folks down there just keep rebuilding and rebuilding. Are there lessons learned down there?
Well, many folks predict that these hurricanes are going to end the growth in Florida, and they've been on record for 150 plus years, going back over 100 years. I think there's over 30 Category 3s or higher that have struck the state. Dire predictions have been made in the past, and they never come about, and it's because the demand to live in Florida just keeps increasing. Nice, solid economy, good weather, sans hurricanes, warm in the winter, air conditioning works in the summer, strong business climate. People are coming to Florida, and this is not going to stop them.
What about the prices of those particular houses, though? Because what we can't argue is that insurance companies are dumping Florida, right? There's going to be local insurance companies. There are many stories of people's insurance premiums just rising really fast, which means it's hard then to sell the house at the same time. Maybe it's more expensive then to buy a house. Does this need to settle out?
It does, and this has been an issue in Florida for quite some time now. It's slowly getting better. Some legislation was brought about in terms of limiting liability exposure off of certain types of damages, and that you had to be timely in filing your claims. Slowly taking effect, but home insurance is going to be an issue in Florida for years to come. The state does have an insurer of last resort, and that's the Citizens Group. If you're there in Florida, you're very familiar with Citizens. So yes, it's a problem. It's something they'll work through. The reinsurance rates have gone down this year for Florida. That was really good news. Probably will not be again. So in other words, the people insuring the insurance companies, their rates had went down in end of 23. They'll probably be back up end of this year now due to the two storms combined.
All right, let's zoom out a little bit from Florida and just talk about affordability, housing affordability, or lack thereof in this country. Can you just give us a sense of how do we got to this place where we are now, where it really seems to be a real stretch for so many Americans, housing affordability?
Sure. So if I had to pick one item that was the most influential in this, or the proximate cause of unaffordable housing at this point in time, was post the last housing crash, circa 2007 and 8, depending on where you were in the country, the markets turned down. Real estate markets all over the country turned down. They bottomed about 12. But during that period in time, we lost thousands of small builders. Today, we mostly have large publicly owned developers. It's hard to keep pace. We've just lost so many builders. You know, the difference between a builder and a developer quite often is maybe the scale. So we have fewer but much larger developers, but we still need those mom and pop builders that build those 50 plus or minus homes a year. And they left the market, or they were forced out, or they were forced into bankruptcy, and they have not come back into the marketplace.
That might be
so we're not building enough units.
Best explanation I've heard for why we don't have enough supply, that nuance. Does that mean then that this is a cyclical industry still, as you say? Like, okay, so then we're gonna overbuild at some point and then prices come down, or is this truly structural?
I think it's still more cyclical, but this is an ongoing issue. So if we go through a few cycles and we haven't solved it, then yes, we have a chronic, persistent problem. I would love to see it a little bit easier for the small builder to develop and thrive and restart. Now, getting that done is another set of circumstances to work through.
You know, one of the issues for a lot of folks is nobody wants to leave their home because so many people are sitting on, 3-4% mortgages, some people below.
You set me up, man. You do it on purpose at this point. I have 2.75, which I talk about all the time.
All the time. So where do you think mortgage rates need to go, Professor, for the Alex Steeles of the world saying, all right, I can consider selling my existing home and going somewhere else? That would free up some inventory.
So our overall mortgage rates in the country, they're higher. Oddly, they're higher since the Fed's announcement to lower the interbank loan rate. But that'll correct itself in the next few weeks or so. But it's not necessarily what rate will have to come about such that folks will start to begin to sell those 2.75, 3% loans. What will happen, probably more likely for those folks, is they'll have a change in life event. I'm moving to another city. Unfortunately, financial distress will cause a lot of sales. So a lot of these things are going to be brought back. A lot of these properties are going to be brought back into the marketplace because I have to sell rather than I want to sell. But we're probably going to see an environment. We'll get back to the 4.5s, 5s. We're never, I don't think in my professional lifetime will we ever see 2.75 or 3% again. That was just so unusual. And we can't have that as the norm. And, we're not back to the norm. Well, that wasn't the norm.
Yeah. I was doing a little happy dance for those of you who were unfortunate
She's
enough to
smug.
see that.
Yes.
I am.
There's an air of smugness.
It's the one thing literally the one thing I can brag about, and so I do. When you're talking about it still being a cyclical industry, how long do you think that cycle then could be? Like, when do we get to like an oversupply situation? 10 years? What does it look like?
So hard to say. Again, the cycle, this last cycle has been extended for several reasons, one of which is COVID, and we were talking about the low interest rates. We were pretty near a peak back in 20-ish, and then we had COVID, and we all had much easier access to capital, shortage of housing, we bid prices up. This is going to be quite some time. We're years in the catch-up, so minimum another 3 to 4 years to catch up, maximum a decade.
All right, you just made the big move from Boca Raton, Florida Atlantic University, to Oxford, Mississippi. 30 seconds. What's the big difference?
Well, I have the best of both worlds now. Originally I'm from the South, and I've always loved or dreamt of being at a state university flagship school, SEC football and sports. I love Boca, so we've kept a place there in Boca. My wife and I have, and we will continue to be there in the summers and at Christmas time. To be anything above I-10 is like a reflecting barrier in terms of winter cold. But right. If you come to Oxford, you would understand why I wouldn't pass on this opportunity to come here and build a program.
Yeah, looks good. Fantastic. Ole Miss. Ken Johnson, Walker Family Chair of Real Estate at the University of Mississippi. That is in Oxford, Mississippi. I just kind of Googled mapped that because I kind of always forget where Oxford is. It's in the northwestern part of the state. It's very close to Memphis, Tennessee, actually.
Oh, I didn't know
And it's
that.
close to the Arkansas border, but it is, that's deep SEC country, Ole Miss, but pretty cool there. But again, a big move from Boca to Oxford.
I thought you were looking up an Uber, and I'm like, you're not going anywhere for like 2 hours, so I don't know what this guy's doing. But now I understand what you were doing.
What it's all about.
All right, coming up, we got Lindsay Piesga, as chief economist at Stifel, and she'll break down the CPI numbers that we got this morning. Inflation cooling less than expected. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We have the major stock averages. They are slightly lower right now. S&P 500 down 12. That's a decline of 0.2% after yesterday's record close. The S&P 500 57.79 right now. Dow Jones Industrial Average 72 points lower after yesterday's record close. The NASDAQ 100 64 points lower right now. That is down 0.3%. So those inflation numbers coming in a little hotter than expected. The so-called core that strips out food and energy because they're so volatile increasing 0.3% from August and 3.3% from the year-ago period. We also saw a further slowdown in the labor market. Jobless claims were higher, and that is what the yields are focused on. The Treasury yields, two-year yield right now, 4 basis points lower. That's under 4 at 3.97. Earnings season underway. Domino's Pizza trimming its 2024 projection for sales growth, but shares, they are higher this morning. Domino's up 2%, in fact. Tesla finally unveiling autonomous taxi prototypes later today. In advance of that, shares of Tesla, they're down just about 1.5%. And then monthly checks for 72.5 million Americans receiving retirement or disability benefits will increase 2.5% next year. Smaller adjustment than what they received a year after a further slowdown in inflation. On average, Social Security retirement benefits will increase by about $50. Well, I told Paul this earlier. You can weigh in on this.
Yeah.
McDonald's today. Remember the Big Mac? Its debut back in 1967.
Sure, I was alive.
2 all-beef patties, specials. Well, forget about that. The chain's rolling out a chicken Big Mac at its restaurants in the U.S. today.
I love this. Do we not like this? Did we not like this in this room?
I'm not allowed to comment on what's good or bad in terms of my culinary preferences.
Well, Alex saw me at the airport eating a Baconator from Wendy's. How about that?
But then he didn't really eat the fries. And I was like, that's like the best part of all that stuff. Or was that just a, he tried to off them on me. And I was like, get away from me.
Baconator.
Yeah, baby.
Baconator. I would just totally eat a double chicken thingamajig.
Go directly to my cardiologist after something like that.
Well,
anyway.
yes, both of those things are true.
But when you're in an airport, you get special dispensation for that. You're allowed. No.
Oh, do you?
Yes, you do.
That's exactly what all cardiologists say. Only in airports.
Sure.
Can you eat all that? I had a tuna sandwich, in case we were wondering.
Yes, she did.
Okay, so let's get back to the CPI number. So the takeaway in general seems to be that disinflation is not what we've seen, say, in the last 3 months, that what we're used to. But that doesn't necessarily mean that the economy is reaccelerating. So we kind of want to understand the nuance here. Here's Lindsay Pieggs, chief economist over at Stifel. She joins us from Minneapolis. Lindsay, how would you categorize the CPI data this morning, and does it change the trajectory at all for the Fed?
Well, I would categorize it as a somewhat disappointing report for the Fed that's still struggling desperately to reinstate price stability. Now, it's important not to look at one data point. That's never enough to sway the Fed in one direction or the other, but we do have to put this in the context of an ongoing lack of even downward momentum in prices. At best, inflation has been uneven, moving sideways for the past couple of months. And so this really underscores the need for the Fed to remain focused on reaching that 2% target. Now, last month, they were buoyed by this mounting concern for the labor market. But as we saw in the latest September labor market data, the employment reports are still near full employment. The data suggests the labor market is still very solid. And so I do think that at this point, the Fed's focus may be better directed towards that price stability component of the dual mandate.
You know, Lindsay, we were talking to Tom Keene and I earlier today with Professor Cam Harvey at Duke University, and he's a big proponent of the Fed's way behind because they're using really dated data, particularly housing data. And if you take a look at some of the real rents and stuff like that, inflation's already whipped, and this Fed should be, cutting rates maybe. How do you feel about that?
Well, I think there's a number of different ways to look at inflation. And sure, if we take out some of the stickiest components, you can get a much better read on inflation. But when we're trying to look at the overall price index for consumers, what we're feeling in terms of costs for goods and services out in the marketplace, that underlying core measure, which excludes food and energy because those are extremely volatile from a policy standpoint, that suggests that inflation is not, quote, whipped, and that the Fed's job of reinstating price stability has not been complete, and remaining on a downward trajectory back to 2% is not a foregone conclusion. So I would caution against that line of thinking. That could leave us in a very difficult position where the Fed takes a more aggressive approach to policy in anticipation of further improvement, only to find out we're not there yet. And the Fed either has to reverse course or simply has driven us into the most unfavorable scenario of stagflation at that point.
But that brings us to the other data point, which is initial jobless claims. I know that they can be volatile. I know you also have a Hurricane Helene as well as the Boeing strike impact. Like there's those reads too. So which path does the Fed follow? Like inflation slowing less than we thought, or initial jobless claims rising more than we thought?
Well, I think you have to put the jobless claims, as you said, in the context of the events that are occurring in the economy at this point. Between the strikes and the hurricanes, we anticipated a lot of volatility. And you can tell that this is an outsized increase relative to the very calm trend that has been well established for the past couple of years. You also have to put this one weekly data point in the context of, again, that September employment report, where we see wages, we see job vacancies, we see the participation rate, we see top line hiring, all suggesting tight-ish conditions, lingering tight-ish conditions for the labor market, which does not support this pop in weekly jobless claims, again, which is primarily a reflection of some of these one-off incidents in the economy. The Fed knows that. The Fed is not going to adjust policy based on a weekly data point. But again, it does underscore this bifurcation among Fed officials. As we saw in the minutes yesterday, there are a number of Fed officials that are concerned about the labor market and say that we should continue to cut in anticipation of weakness to support the labor market and the broader economy, regardless of what it takes. On the other side, you have Governor Bowman leading the pack saying, no, there's still upside risk to inflation. And that's where we need to keep our focus, because without price stability, the economy doesn't work for anybody.
How about the consumer, Lindsay? Given some of the data points you've seen over the last couple of weeks, what's your read on the U.S. consumer?
Well, I think the consumer is surprisingly resilient at this point. The consumer is still out in the marketplace spending on goods and services, but they're doing so at a noticeably reduced pace. We've gone from double digits to 8 to 6, now down to an average pace of 3. Again, still positive, but a very clear second derivative decline or a slower pace of positive expenditures, as consumers are feeling the weight of higher prices, higher borrowing costs, the resumption of student debt payments. And so we see consumers increasingly turning to these less organic measures for support in order to keep spending in the marketplace. We see 401k hardship withdrawals up double digits. We see consumers turning to an intergenerational wealth transfer. And of course, surprise, surprise, credit cards are up there on the list.
Yeah, absolutely. All right, Lindsay, thanks a lot. Really appreciate it. I still feel like it's all a Rorschach test at the end of the day. Lindsay Piegza, she joins us from Stifel. Let's get back to the impact of Hurricane Milton. There's many ways to look at it. We just talked about the housing market, so now let's talk about the commodity market. It's a supply and it's a demand issue. If you have to shut down rigs, shut down production, that's one thing. And at the flip side, you don't have people driving around. That's a demand issue. Let's see how long all of that winds up lasting. Vincent Piazza, Bloomberg Intelligence Senior Equity Research Analyst for Oil and Gas, joining us now. Hey, Vincent, how long do you think until we get a good sense from the oil and gas guys what the hurricane impact is?
Well, I think we are seeing it right now. I mean, if we think about the Category 3s that we've seen go through the region, demand, at least demand that we're tracking right now, we're off roughly between 1.5 to 2 BCF a day, and it's really the impact on the natural gas side, because we roughly have, call it 3.5 million customers without power in the Florida area. 70% of the power stack is supplied by natural gas. So that's where the conversation needs to be on the natural gas impact. We did dodge a bullet. There is a silver lining. This storm was supposed to be much more powerful, and it is unfortunate that we still have the damage that we have, but we did dodge a bullet. The damage could have been much more severe. The demand, the consumption that we lost, that is a permanent loss. Whereas the production, that's still behind pipe, right? That is still just curtailed. So that will still be there. And that's why we have balances loosening right now. Earlier in the month, we had natural gas prices, Henry Hub prices closer to 3. Now we're down to somewhere around 264, 265. So the true impact is on the consumption side. The good news is Unfortunately, Florida is used to these types of weather disasters, weather incidents. So the demand side of the equation, we should see that coming back, depending on how quickly the utilities can get power back up and running. But you have 3 million people without power. Milton has compounded the effects of Helene, so that consumption is offline, permanently lost, whereas the production is just being delayed. So also the good news, Paul and Alex, is we're right around this shoulder season where demand is not as significant if this would have happened in the month of August or July, where heat is definitely an issue in the Southeast. It would have been much more impactful.
So longer term, like 6 months, 12 months, when you think about nat gas, Vince, where do you think it goes and what drives it?
In the interim, it's really demand driven because of the impacts of the storm and how quickly we can get people back up and running, how the infrastructure can recover. But on the production end, we're roughly down 1 BCF. We don't get a lot of natural gas production from the Gulf of Mexico anymore. But again, that's just delayed output. The real impact is on the demand side. And so for us as natural gas analysts, the next true crucial catalyst is the winter season across the Midwest and the Northeast. That'll be the next big driver. But what we're going to see here is that as we get through this injection season, this shoulder season, we should have relatively sufficient natural gas in storage. So that should be a temporary weight on natural gas prices as we head into the winter season. So at that point, we turn to the amount of output. And quite frankly, the output is running a little hotter than what we would have expected at this time.
All right, Vincent, thank you so much. We really appreciate it. Vincent Piazza, Bloomberg Intelligence Senior Equity Research Analyst for Oil and Gas, joining us there. Should point out is that Thomas Barkin from the Fed is in a Q&A right now. Richmond Fed President, he's saying that inflation's down significantly, but you can't declare victory yet. It feels like all Fed officials now are united again, sort of not committing one way or the other and being cautious of those two-sided risks of inflation as well as growth. All right, coming up, Tim Craighead, Bloomberg Intelligence Global Chief Content Officer, will be joining us. 10 companies you gotta watch in the fourth quarter. We'll probably get to like one of them, but nonetheless, this is Bloomberg Intelligence.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Stocks edging lower from the records that we saw yesterday. This follows a pair of economic reports. Among them, the inflation report, that failed to improve the rate of inflation as much as expected last month. More workers also filed for unemployment benefits last week. Inflation slowing to 2.4% in September from 2.5% in August. That's on a year-on-year basis. This according to the Consumer Price Index. Economists were expecting an even sharper slowdown. At the same time, you had that separate report showing 258,000 workers filed for unemployment benefits last week. That employment part looks like that is what sent the yields lower. The 2-year, which is more policy reactive. Right now, that's down 3 basis points, under 4, just by a hair's breadth, at 3.99. The S&P 500 is down 16 points, down 0.3%, 57.76 on the index. The Dow Jones Industrial Average down 96 points, that's down 0.2%. And the Nasdaq 100 75 points lower. Earnings season underway, and the big banks, the financials, is going to start reporting tomorrow. We'll get, among others, J.P. Morgan Chase, the focus for investors, net interest income, and how the consumers are doing. Delta Airlines lost 0.6% after reporting weaker results for the summer than analysts expected. Oil prices, meanwhile, rising, trying to claw back some of the sharp give back from earlier in the week. Brent is up 2.5%. 78.34. NYMEX crude right now up 2.25%, 74.88. Here's one for you. Finally, Amazon unveiling a new AI tool to help its drivers. It's designed to solve a major pain point in the quick delivery apparatus. So you have the drivers rummaging in the back of their vehicles looking for packages. This thing is going to project a green circle on packages that have to be delivered at each spot, red X's on those that have to be delivered later. So
we talked to the guy in charge of that yesterday on TV.
I'm thinking bus drivers for little kids could use this too.
Just pick up the kids so it's easier to get them out.
Get them the green dots for the little kids who have to get off the next stop.
Yeah, there we go. But I think of it, it's going to save 30 minutes or something. It can be material for these
It's
guys.
all about saving money for Amazon.
Yeah, they pass it on. You'd like it. Just saying.
Oh, I just love it. I talk to my Amazon drivers. I actually am nice to them and talk to them. They are so, it's just anecdotal, but they're really stressed out.
Yeah, well, I bet, because they're probably under a time clock and the whole thing. And I love that John Tucker talks to his drivers. This doesn't surprise me. Okay, thanks so much, John Tucker.
Nice.
Alex Steele, Paul Sweeney. You are nice, don't you? You try and do a thing.
I talk to my bartenders. Does that count?
Yeah.
That's the same.
I totally talk to all our lice pickers that we use at home. We've had a lot of lice happening in our household, so I've gotten really close to all our lice pickers.
We dodged that.
Good times. All right, so this is Bloomberg Intelligence Radio. We bring you all the top news, not about lice or Amazon, but other stuff too, through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies, 130 industries around the world. Tim Craighead joins us now from Bloomberg Intelligence. He's Global Chief Content Officer. He has his eyes on everything. And they have a great note out that talks about 10 companies to watch in the fourth quarter. All right. Can you pick your favorite? I have ones I want to ask you about, Tim, but you pick your favorite, and let's start there.
Well, you guys are talking about talking to your bartender and your Amazon driver. You're going to do that after you visit TrueLeave, even better.
All right, so what's that company and why?
So, just to put context, this list of 10 are all focus ideas of ours. So companies where we have a high conviction view that we think is different from what the market thinks, and there's catalyst ahead. TrueLeave is a marijuana grower and distributor. They have stores, 70% of their stores are in Florida. And Florida has on the referendum this November the potential for legalization for recreational use. It would be a big deal for TrueLeave if this were to come through.
Yeah, maybe Florida, huge market. And you know what I recognized when we went over to Ireland a couple weeks ago? They don't do the gummy thing over there. They don't have the weed thing.
Really?
They got to get on board there.
They just go to Amsterdam. Maybe that's it. They don't really need to. They can't compete.
I'll get Tim on that.
They just go to New York and then they come back to Ireland.
Exactly. And to sports. Talk to us about that, because I feel like I know they're an Asian company, so I'm assuming this has a China call to it?
It does, with an interesting twist. Anta is a sportswear company. They have a number of brands. I think when I've been on your show before, you may have seen that I've had an Arc'teryx vest on.
Well, you're like one of those.
Is,
Tim is like an extreme biker, climber, hiker, all the stuff that I just have no interest in.
Good for you, Jim. I got nothing on that.
But
no,
Arc'teryx is owned by Anta, but the reason why Anta is on here is twofold. Number one, they do have a lot of things going on from the standpoint of driving their business with various brands. And the Olympics play through. We'll get results when they report next in terms of how good it's been. The China national team wore Anta Sports kit. But it's also a case you've seen lots of news about Adidas and Nike and how they're trying to get their inventory under control. That's making pricing better for sportswear generally, and we think that that's playing through into Anta Sports margins as a corollary.
That's interesting, especially when you compare it to, like, say, Nike. I understand they do different things, but still. You have Alstom on here. So this is basically straight up railroad stock. Why do you guys like this one?
Well, there's two things here. If you were to look at a 3-year, 5-year type chart, you would see that this company has gone through some problems. They had a big write-off and problem that was announced a year or so ago. The stock had collapsed. That's been settled, and they're on the right track, no pun intended, at this point. But importantly, there is a new European Union-wide signaling system that's coming into place that is meant to be reducing a lot of complication between different countries and whatnot. And it's an Alstom system. And in general, the train business is running pretty well. We think they're on a road for recovery.
Tim, the biggest or one of the bigger market cap names on your list is Saudi National Bank. And I'll start with, I know nothing about Saudi National Bank, but it's 57 billion market cap. What's the story there?
Yeah, it's really interesting. And this is true for Saudi National Bank. It's also true for some others in the country. It's running contra to what most banks are experiencing. I think there's been lots of news and coverage, and certainly we've written about the pressure coming ahead for most banks with their net interest margins as interest rates start to decline. Their loan pricing comes down, and that's not great for margins. Saudi National Bank is an interesting case where, given the nature of how their loans reprice versus their deposits repricing, they actually stand to see over the course of the next 6 to 12 months net interest margin growth and expansion. And so it's running counter, given just simply the nature of their asset and liability mix, to normal bank profitability in the current cycle we're in. So it's a really unusual story.
Okay, we got like a minute. Can you do First Solar for me? Because that's gonna, for me, that's a TBD based on what happens with the Inflation Reduction Act here in the U.S. But you tell me.
It absolutely is. I mean, we all know that the election coming up is going to have a lot of implications for what happens from energy transition related spending and whatnot. That said, we're still going to see solar panels as a renewable energy source continue to grow. These guys are in the catbird seat, so to speak, from the standpoint of they have a dominant position in the U.S. They've got good technology. Even though the Chinese producers are bigger and lower cost with arguably better technology, there's way too many restrictions for China product to come into the States. And so First Solar is not, you wouldn't say it's in a monopoly position, but it's a very advantaged position. And almost regardless of what happens with the IRA, we think that they've got wind at their back for better order growth going ahead.
All right, Tim, thanks a lot. Super appreciate it, Tim Craig. We're going to get you back because we got through, what, 5?
Yeah, we got to get him back into New York. We need to get him to New York.
That's true, too. But, Mark, let's get him back. We'll do the other 5. All right, Tim Craighead, Bloomberg Intelligence, a Global Chief Content Officer, joining us there on companies to watch in the fourth quarter. Interestingly, First Solar down by about 8%. It got a price target. Jefferies sees some risk to guidance, labor shortages and supply chain. That's a short-term call, obviously, but it's interesting to see how that winds up playing out. All right, coming up, Mark Champion will be joining us, a Bloomberg opinion columnist, on Iran's Revolutionary Guard and what to do with Israel. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. Get back to geopolitics coming out of the Middle East. I guess the next issue to be addressed is where will Israel strike next in retaliation for that ballistic missile attack of about a week ago now? And everybody's just kind of waiting. I'm not sure where they want to go. The question is, what type of response and what type of target will they hit? Mark Champion joins us. He's a columnist for Bloomberg Opinion. Mark, what's the latest reporting coming out of Israel and that part of the world about what Israel may do in terms of a retaliatory strike?
Well, I mean, we know that there's going to be a cabinet meeting, a security cabinet meeting, where they will decide or approve what they want to do. We know, too, that there's been quite a bit of tension between Prime Minister Netanyahu and the Biden administration over exactly what to do. The Israeli defense minister was supposed to go to Washington, before the security cabinet meeting, before Netanyahu spoke with President Biden yesterday on the phone. But Netanyahu nixed that trip. So, although we don't know exactly, the details of what they're arguing about, the broad outline is that the U.S. administration doesn't want Israel to hit nuclear facilities in Iran, doesn't want them to hit the major oil infrastructure. And obviously, it sounds like there's some tension around that.
What in your reporting, research, commentary would be a good target to hit?
Well, there are an enormous number of possibilities for the Israelis to go after. They have the capabilities. They've shown that when they responded in a very, very limited, precise way to the last barrage of Iranian missiles. That was back in April. And they just took out the air defenses near Isfahan, which cover a nuclear facility, a known nuclear facility. Unlike the Iranian barrage, which was 300 missiles, it was very small, very targeted, very successful. So we know that they have lots of targets. What I would see as would put Iran and the Supreme Leader in a very difficult position would be if they had a proportionate response where they go after the military assets of the Islamic Revolutionary Guard Corps. They control the ballistic missiles and launchers that have been used against Israel. They're also, they organize the so-called axis of resistance that has been attacking Israel. So they are a completely legitimate target. The response would be understood, throughout the region. And they are also, these are assets that pose a direct threat to Israel. If you think about the ballistic missiles, these are what would be required if Iran was to get to develop a nuclear warhead. They need the ballistic missiles to carry them. So they are important targets, legitimate targets. And this is something that the U.S., for example, could accept, Europe would accept, and a lot of regional leaders would accept.
But Mark, there's also reporting that there are those in the Israeli government that says this is the time to go big and maybe go after not just energy assets, but perhaps some of their nuclear capabilities. How much influence and sway do you think they're having in the debate these days?
They have a great deal. I mean, we've seen that they have a great deal of sway. The cabinet, the government that Netanyahu runs, it depends on their support at various critical junctures to do with whether there should be a ceasefire, for example, in Gaza. And they've intervened to say that we will collapse the government if there is one. So they are very important. They do have sway. And there is a logic, for the Israelis. The Hezbollah, for example, was what the Iranians called their forward defense. It was their main deterrent against Israel attacking Iran's nuclear facilities, for example, because Hezbollah had this huge arsenal of missiles that it could launch from a very short distance. Hezbollah has been, significantly degraded. Hamas even more so. So there is a real, body of thought in Israel that says this is the time. We'll never have a better one. It's a transition in the U.S. as well. There is a vacuum where any pushback, a real pushback might be. So this is the moment. The problem there is the same as it's always been, which is that it's very difficult to actually eliminate a nuclear program that, number one, is buried under mountains in large part, and number two, is largely a matter of knowledge rather than material, so it can always be rebuilt. So it's, there's a reason why the U.S. has resisted, the Pentagon has resisted doing this for a decade now. Even when there were, President Bush, for example, George W. Bush wanted to do it.
All right, Mark, we appreciate it. Your insight is always, always, always important for us. Mark Champion, Bloomberg opinion columnist, joining us there on what the targets may be and how the thought process may play out with Israel when it comes to responding to Iran after missile strikes. We're going to have much more coming up in the next hour of Bloomberg Intelligence. We'll get your check back in on what's happening in Florida and the storm and any other flooding issues that we need to be aware of as well. Also, Kara Murphy is CIO at Kestra Investment Management. She'll be joining us to discuss her outlook on the markets. Taking a look here, we get 44 record highs in the S&P as of yesterday, just this year, and now we're giving back a little bit of those gains. The S&P is off by about 0.3%. Where does the Fed go? Does it follow those rise in initial jobless claims or that inflation data? This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Thursday, everybody. Happy Friday Eve. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We have a great show lined up for you here. First, we're going to tackle the aftermath here of Hurricane Milton. Rob Carolyn standing by, our Bloomberg meteorologist, to let us know how the weather is playing out. We're also going to track that from an insurance level with Matthew Palazoa, Bloomberg Intelligence senior analyst at PNC Insurance. We'll also tackle the market. Kara Murphy will be here, CIO of Kestra Investment Management. Plus, we have earnings starting. We got Delta this morning. George Ferguson, Bloomberg Intelligence, aerospace, defense, and airline senior analyst will be joining us. So lots coming up in the first and the next hour. But let's kick it all off here with Charlie Pellet with a Bloomberg Business Flash.
Right, thank you very much, Alex Steele. We got you covered on a number of fronts. Right to the markets, and this update brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor-to-staff ratio. Small firm attentiveness, big advisor impact. Go to commonwealth.com to learn about our consultative support and technology. Stocks lower across the board. The Dow, the S&P, NASDAQ 100 index, Russell 2000, all very much in the red. Russell 2000 particularly hard hit right now, down 1%. To put that in context, S&P down 18, a decline of 0.3%. The Dow lower by 154 points, down 0.4%. And we do have NASDAQ down 64, a decline of 0.4%. 10-year 4.09%, the 2-year 3.99%. Gold advancing $16 the ounce to $26.24, a gain of just about 0.6%. And West Texas Intermediate crude on heightened Middle East tensions, surging 2.5%, $75.05 for a barrel of WTI. So stocks are lower as traders weigh data showing hotter than expected inflation and a slowdown in the labor market. Lindsay Pieggs is chief economist at Stifel Nicholas, and right here on Bloomberg Intelligence last hour, she told us this morning's CPI report was not Fed friendly.
We do have to put this in the context of an ongoing lack of even downward momentum in prices. At best, inflation has been uneven, moving sideways for the past couple of months. And so this really underscores the need for the Fed to remain focused on reaching that 2% target.
And you can hear more of the conversation with Lindsay Piegza on the Bloomberg Intelligence podcast. You can download it wherever you get your podcasts. Briefly, Delta Airlines shares down 0.3%. It forecasts profit and sales short of Wall Street estimates. Our Nora Melinda will have a whole lot more on Delta, Pfizer, and Tesla coming up in just a moment. Again, recapping, S&P down 20, a decline right now of 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Alex Steele, I'm along with Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so you can head over to youtube.com and search Bloomberg Live Radio, and that's where you'll find us. Lots of TV screens here in our radio studio. I'm seeing some reporting here. At least 6 fatalities from Hurricane Milton across the state of Florida, but Governor Ron DeSantis recently saying that it could have been worse. They feel like they've missed the worst case scenario, but still very serious there. We want to get the latest reporting from Florida. Rob Carolan, Bloomberg meteorologist, joins us here. Rob, give us your sense of how this storm played out across a pretty wide swath of the state of Florida.
Well, I'd have to agree with the governor that it could have been worse. We were fortunate that yesterday afternoon, just before it started to make landfall in western Florida, it did start to weaken. The upper-level jet stream there on the Gulf Coast started to make the system become asymmetrical, so we saw dry air wrapping around the southern part of the storm. Wind started to decrease. I've seen lots of gusts in western Florida early last evening, up over 100 miles an hour, but I haven't seen anybody sustained at 120 miles an hour. And there is a big difference between a sustained wind at 90 and a wind at 120 miles an hour, and I think we're going to see that in the difference in that the power, even though it's out for over more than 3 million people, in lots of places, it's probably going to come back quickly. The storm is now well east of Cape Canaveral, out in the Atlantic by about 135 miles an hour. It's racing east-northeast at 20 miles an hour. It's in the process of becoming an ordinary low-pressure system rather than a tropical system. Already starting to see the sun now coming out in the Tampa Bay area, which is certainly a good sign.
Yeah, definitely a good sign. What about flooding? One of my biggest fears is being in a car in a flood, like hands down. And I'm wondering if the flooding risk is past us.
So, Alex, the storm surge risk has ended in western parts of Florida. Now the core of the system is offshore. We still have a storm surge issue in northeastern Florida because the winds behind the system are now still blowing out of the north-northeast. That will start to go away. As the system gets a little bit further offshore, the winds will turn west, start to blow that water offshore. We're still looking at tides running about 3 to 6 feet above normal there in the northeastern coast of Florida. The other issue we're hearing about is a lot of freshwater flooding. So that's from the very heavy rains that we had. The St. Petersburg airport reported over 18 inches of rain last night, 5 of which fell in an hour. Around Orlando, the rainfall totals have been between 5 and 10 inches. But we're seeing the difference between a state where the terrain is flat as opposed to what we saw in the western Carolinas where you had the mountains and the rain. There we had, over 200 fatalities, and a lot of people were washed away by floods. In Florida, it's just the water has come up, and just now we have to wait for it to recede. It's not rushing anywhere. So it's going to interfere with travel today, but certainly not like what we saw in the western Carolinas with Helene.
All right, Rob, thanks so much for that reporting. Appreciate it again, as always. Rob Carolan, Bloomberg meteorologist, giving us the latest there. Looking at the markets here, S&P is off about 18 points. The Dow's off 150. The Nasdaq's off about 60 points, all about 0.3%. Let's see what's happening underneath the hood there. We do that with Nora Melinda. She covers all the equity markets for Bloomberg News, and she joins us here in our studio. Nora, what are you looking at today?
Well, still keeping a close eye on Delta Airlines. That's ticker DAL. We're seeing shares down about 0.2%. That stock is trading ex-dividend today, so it's something definitely to keep in mind here. But of course, we do know that comes after it reported earnings, weak fourth quarter sales, as well as a profit outlook that disappointed investors. And as we're really thinking about this more broadly, they are saying that they do expect a pickup and some great news as they're coming into the holiday season. But one thing that people are thinking about too is a comment that they made about the election and how they think that that time period could have a little bit of uncertainty for travelers. They say in the past they've noticed a bit of a pullback from travelers during that time period as people are a little bit iffy about the election and the outcome there.
I also
I'm calling BS out on that.
But is it business travel?
No,
I can see business travel being, or maybe just like retailers saying it's
I followed the airline stocks for 35 years. I've never once heard that.
Yeah, and they're also saying it about just broader consumer discretionary. They're saying any large purchase.
Yeah, I'll buy that.
So maybe we'll take that, right?
Interesting. All right, Pfizer. Okay, what drama now are we in? What round is drama?
There's always so much drama, but I'm watching Pfizer shares. The decline is paired, but shares were earlier down as much as 3%. And this comes after former execs Ian Reed and Frank D'Amalio said that they had decided, quote, not to be involved in Starboard's activist campaign against Pfizer. Now, if you all remember, these were the top execs that had been working with Starboard previously to push for changes at the drug maker. So some news that I'm just seeing that came in about 10 minutes ago is saying that Pfizer is now threatening legal action against the two of these top former execs. So keeping tabs here, lots going on.
And lots going on tonight at Tesla. So I'm of two minds here. We have the robotaxi thing, but is that just like a free ad for Tesla at the end of the day? But yes, but we still have to talk about it.
I mean, but we still have to talk about it. It feels like all these events, all eyes are there. It's a spotlight, of course, and people consider this to be a make or break night, as many of their events tend to be. And this has really been a company that people are looking for more from. So this is a fully self-driving vehicle that they're going to be rolling out. And everyone wants to know whether or not this will actually be a positive for the company and whether it can really propel the stock forward.
Or is it just a deflection move to deflect the attention away from how difficult it is to make automobiles?
Right, but let's not talk about that, right?
Yes.
I mean, it's a fair point. It is a fair point. Rabbit out of the hat is that is what some are looking for sure.
Yeah. All right. Definitely. Very good. Nora Melinda, thanks so much for joining us today. Really appreciate it. Nora Melinda covering all of the equity markets for Bloomberg News. And again, the S&P 500 and the Dow and the NASDAQ all down about 0.2 to 1/4%. So not much movement there. Let's check in with somebody who's paying attention to earnings because they're going to kick off in size tomorrow with JP Morgan. We always pay attention to what Jamie Dimon says about the overall economy. Kara Murphy joins us. She's the CIO at Kestra Investment Management. So, Kara, we're going to have earnings tomorrow, but I'd love to just get your thoughts here on that CPI print today and maybe how you think that may impact Fed actions going forward.
Yeah, so given the print today, I don't think there are too many doves who are celebrating. This is definitely a little bit of a fly in the ointment of the deceleration in inflation that we've seen over the last couple of months. That said, I mean, it looks like markets are taking it in stride. So, inflation showed up a little bit hotter than what I think many of us would have liked to have seen. And I think it's a really good reminder that the Fed has a tough job. We saw also claims happen to come in today a little bit higher than expected. So what we're seeing now is inflation a little bit hotter than expected, labor market a little bit weaker than expected. So it's a really difficult trajectory. So I think the Fed is still on track to do a 25 bip cut at its next meeting. Today's print won't be enough to really change the Fed's mind, but it does highlight that there's a lot of complexity and a couple more sort of hotter inflation prints between now and the end of the year could start to slow those Fed rate cuts.
Yeah, exactly. We've seen Fed cuts kind of priced out a little bit for 2025. So if we are, okay, it's a twofer. Does that mean that the U.S. economy could reaccelerate? And then if we are seeing a longer economic cycle, does it change where in the market you have to be invested within equities?
I think that's the question that we should be asking ourselves. And I think the easy answer is that, we know that the economy and the market typically doesn't go in a straight line. So the Fed is actively trying to pivot, right? We had our first rate cut in quite a while, and that introduces a lot of cross currents into the market. And so it makes sense that the economy is going to kind of, chunk around for a little bit. So yes, we could see a reacceleration. I think the Fed will then, start to pull back a little bit. But this lag issue in monetary policy is a really big challenge because the labor market starting to weaken a little bit is responding to rate cuts that happened quite some time ago. So rate hikes that happened quite some time ago. So even if the Fed starts to cut, it will be a while before we see it in the market. So it makes sense that the market or the economy will sort of reaccelerate and then slow down again. And it'll take a little while before we get to that firm footing and determine where the Fed should have its resting place be. So then what does the market do in the meantime? I think smaller companies who rely more heavily on debt are a little bit more subject to the Fed's whims. So as Fed rates come down, they'll benefit more. If those rates take longer, it might take longer for them to see that real earnings reacceleration that we're waiting for. But there are multiple different pieces that kind of feed into that.
So given all that background, how are you guys positioned? First, let's go with the equity side of the equation. How are you positioned there?
So we still are really favorable on equities, but what we found is that your core benchmarks have moved very heavy into large cap or mega cap and into growth. So what we're doing is kind of taking a step closer towards a little bit more even split between value and growth and favoring some of those somewhat smaller companies. And like I often say, you don't have to go all the way down to small cap in order to benefit from being out of that mega cap. You can just go into the smaller large cap, or we think mega cap, mid cap is really attractive as well. So just starting to step a little bit towards the center of that while still remaining overweight equities.
Yeah, I feel like I've been talking about mid caps for a bit, and every kind of day you got the S&P making a record high, the mid caps also make a run for it at the same time. Okay, how does that then position you in the bond market? Like, do we still get a steepener? It's just a matter of how we get that steepener that matters?
Yes, it does. And I think the easier sort of bet to make on the fixed income side is to be out of high yield credit, not completely out, but underweight high yield credit, where we think if the Fed rate cutting cycle takes longer than we'd like to, those are the companies that are going to face some pressure. And you see really low spreads there, right? So you're not being paid a lot in order to take that risk. High quality corporate, on the other hand, we think is pretty attractive. There you get a nice interest rate bump. You're not taking a huge amount of duration risk, but you're still benefiting from that higher overall yield compared to treasuries. So in treasuries there, would be more in the belly of the curve outside those really long duration, which we've seen be fairly volatile as inflation sort of comes and goes, but you want to start to step off of those really short-term rates.
And if I look at the IN-GO function on the Bloomberg terminal, which gives me a nice overview of kind of fixed income market, year-to-date performance, the best for fixed income has been, and by far, has been U.S. high-yield corporates.
Oh, yeah.
Talk to us about the high-yield market.
I know.
Love to get your thoughts there. What do you think about the high-yield market?
Yeah, so it's been super interesting to see how it's really led. And typically what we see is high yield is very highly correlated with equity markets. So in some ways, that's a lot of what we've been seeing, where it's very consistent that investors are looking for a little bit more risk. And so if they're dipping their toe into the fixed income market, high yield becomes an easy place to go. I also think as folks were worried about kind of the trajectory of the Fed rate cut, that was also a safer place to be. You're a little bit more inoculated from those rate changes because you have that spread. But again, that's looking in the rearview mirror. So we've seen that real strength in the past, and going forward, I don't know that you're being paid to take a lot of that risk.
Yeah, right, exactly. So then if you want to go in corporate credit, where's the right place? Like you're looking at double Bs, triple Bs kind of thing?
Yeah, I think right in that place. And you can also go higher credit quality as well. Again, those spreads are fairly tight, but if you're in the belly part of the curve, you're a little bit protected from any of that volatility on the long end. And you can have some like really nice juicy yields. If you look at yields today in that space compared to the last 10 years, you have among the best yields that we've seen during some investors' lifetimes. So that's a pretty attractive place to be.
And Kara, I think the month of September was either the biggest issuance month, or one of the biggest issuance months of investment-grade corporates. When you as an investor see companies rushing to the market, what does that tell you about the market? Do you take anything away from that?
Well, I think a lot of firms had really held off issuing debt because of uncertainty in the markets and uncertainty of where rates were going to go. So I think this is a sign of confidence that people are willing to come back to the market. I would expect to continue to see issuance kind of tick up over the next couple of months, especially if we see additional rate cuts. So I think it's a healthy sign for the market overall.
All right, Kara, really appreciate it. Thank you so very much for joining us. Kara Murphy, CIO at Kestra Investment Management. It all depends, too, Paul, like what do you think the catalyst is going to be? Deutsche Bank had a really interesting note out, and I appreciate it is from the equity side, but saying that cyclical growth is now the key driver for equities, not inflation, not rates, which makes earnings season kind of all the much more important. Sure, maybe you're all talking your book of what you like to cover, but the idea is like, look, the Fed's going to do the thing. Other things are going to matter, especially if we get any sort of CapEx spend after the U.S. election, or even after earnings, for example, and some of that's going to be structural rather than cyclical.
Yeah, be interesting to see. And I guess, Jamie Dimon tomorrow, I think a lot of folks kind of really dial into that call, hoping to get a view of kind of how the global economy is looking across all of their businesses. But again, maybe it could be a time for cyclicals. A lot of folks, as Kara was suggesting, maybe thinking about broadening out this market a little bit in mid-cap and small cap. So keep keep that in mind.
All right, we are much more for you. We're looking at Delta. We will get to that in just a moment. George Ferguson, Bloomberg Intelligence Senior Aerospace, Defense, and Airlines Analyst will be joining us. Does he buy this whole people are scared of the election, I'm not buying a plane ticket thing in the beginning of November? We'll see. Plus, Matthew Palazzoa, Bloomberg Intelligence Senior Analyst for PNC Insurance, will update us on Hurricane Milton. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
On Wall Street, we do check markets all day long. Here at Bloomberg, we have got the Dow, the S&P, NASDAQ in the red off session lows. 10-point drop right now on the S&P at 57.81, retreating from yesterday's record, down 0.2%. Stocks are falling as traders weigh data showing hotter than expected inflation and a slowdown in the labor market. The Dow now down 91, down 0.2%. NASDAQ down 25, a decline of 0.1%. The Russell 2000 is down by 0.9%. 0.6%. 10-year at 4.08%, with a 2-year 3.97%. Gold up $15 the ounce, 26.23 right now, up 0.6%. While West Texas Intermediate crude oil is up 2.1%, 74.78 for a barrel of WTI. Eli Lilly is ramping up its legal campaign against companies that were temporarily allowed to make and sell copycat versions of its blockbuster drugs used for weight loss until a shortage ended last week. Lilly shares down now by about 0.6%. And former Pfizer executives Ian Reed and Frank D'Amelio have decided not to be involved in Starboard Value's activist campaign against the drug company. We've got Pfizer shares down now by 2.1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Alex Steele and Paul Sweeney. We are live here in our Bloomberg Interactive Broker studio in New York City. We're also streaming live on YouTube, so you can head over to youtube.com, search Bloomberg Live Radio. Looking at the shares of Delta Airlines, just down fraction, just a smidgen today. Delta's guidance misses estimates after some summer upheaval. That's kind of the story that's out there for Delta. Let's break it down with George Ferguson, Senior Aerospace and Airlines Analyst for Bloomberg Intelligence. George, I'm going to be flying Delta this week. I'm usually United flyer, but I'm on Delta this week. What's going on with our friends at Delta Airlines? Talk to us about the quarter and maybe their guidance.
Yeah, so, really, I think the big takeaway from the quarter and the guidance is that...
We have George's. We've got the video, but I don't have the audio. Do we have them? Okay, good.
Can you hear me now?
Yeah, great, perfect.
Can you hear me now?
Yep.
I think the big story from Delta's earnings and the guidance is, one, it looked like most of their markets were softening during 3Q. So we saw yields down in domestic, Atlantic are the two most important markets for them, which is kind of synonymous with fares. So fares, there's probably excess supply in the market, we kind of think, and that impacted fares. Now, what Delta told us is that we started to see an inflection in September, and they think it's going to carry forward into 4Q. So they're telling us airlines bringing down capacity, across the market, and that ought to firm up fares a bunch. And we kind of look at what they provided as guidance, plug it in our model. They're seeing a lot more diminished decline in fares during 4Q. It's what they've got built in. So I guess we'll see, and then what's a big portion of 4Q is going to be much lower fuel prices, right? I think we're around $2.10 roughly today for Gulf Coast jet fuel. I think last year we were in the high $2, $2.70, $2.80. So that's going to be a huge tailwind for them. And labor was still a bit of a headwind, right? They gave away those nice pilot contracts. There's increases every year. That's still a bit of a headwind. So I think everything in 4Q is built on this fuel price and built on, I think, firming demand and less supply in the marketplace.
What about the CrowdStrike Microsoft debacle situation? They said that they're going to look for reparations. Are they? What does that look like? How much money here?
Yeah, I don't know quite what to make of that, right? Even when there was a bit of noise in the quarter, and we kind of adjusted that out, and still the fundamentals were down year over year. It was some $300 million, I think they said, came out of sort of reimbursing customers and costs and such. So I'm not sure where they go from there, but we pulled it out of the quarter, and again, even without that, I think the fundamentals are still that. Fares were falling during the quarter, and I think, again, that's kind of how when we weave through the story, we're more concerned about that than the CrowdStrike thing.
Hey, George, how do airlines adjust capacity? Did they if they want to take capacity out of the system, did they just go park some planes in a desert somewhere? How does that work, and how quickly can they match capacity to demand?
So there are lots of ways to cut capacity, and one of them is, like you said, that you park some airplanes, you don't fly them, knock some of that capacity out. I think some of the other trends we're seeing around the marketplace is that Southwest was a fast grower. They're growing much less, much slower, which will help the marketplace. They can just refresh fleets slower. A lot of the refreshes we've seen at airlines have been larger airplanes from Boeing and Airbus as they're trying to defray some of those cost of pilots, so they put more seats behind them. If they slow down that refresh, which is easy to do right now, because Airbus and Boeing just aren't building airplanes, if at all, as fast as we would have expected. You're seeing some airlines have problems, right? Spirit Airlines, if we lose an airline or they go through bankruptcy and there's a reorg, they'll slow down some of their growth. So there's a number of different things that can slow down capacity to the marketplace. And I think, those are the things. It's refresh. It's airlines having problems cutting back schedule, not growing as fast. To some degree, the market is trying to grow, I think, just slower so that demand and supply meet each other. We're not seeing a market that, for most airlines, are actually cutting capacity. They're just getting down to low single digits of capacity growth.
All right, George, appreciate it. I can't remember a day where we didn't talk to you, which is not a bad thing. I'm just saying, there's a lot happening in your space. George Ferguson, Bloomberg Intelligence, Senior Aerospace, Defense, and Airlines Analyst. All right, we want to get the take now on what Hurricane Milton means for the reinsurers and the insurance companies. Matthew Palazzoa, Bloomberg Intelligence, Senior Analyst, PNC Insurance, joins us now. So how have you changed your modeling in terms of the impact for the insurers based on what we've seen?
So it looks like they avoided the worst case scenario. We were talking about going into the storm, the industry was talking about $100 billion worth of insured losses, which would have made it the worst storm ever. That was predicated on a direct hit into Tampa Bay, which really didn't happen. So that was the good news. The bad news is it's still going to be a large insured loss event. Now, the other good news for the large national carriers, we kind of talked about this before, is they're just not big players in that market. So companies like Travelers, Chubb, AIG, Hartford, they're not major players in the Florida home market. They will have losses from this, but much less than we initially anticipated. I come to like a midpoint of maybe 5 to 6% of annual EPS taken out from the storm.
What do we think the insured losses actually will end up being, if not $100 billion?
So it's super early, Paul, but I mean, just back of the envelope, we're kind of looking at maybe 10 to 50 or something like that. Like it could be on top. Hurricane Ian 2022 was 65. The early reports I'm hearing is the surge in Tampa was actually less than even Helene. Right. So it was less than Ian as well. So it could be lower than that 65, but it's still early and you've got the Helene damage on top of it.
So how does it work then with premiums? I mean, we're used to hurricanes, right? So like, do premiums for insurers or reinsurers wind up going up? Like, how does that work and what's the immediate reaction?
So you got a bunch of dynamics in this. Home insurance premiums going up anyway, right?
For everyone? Or
pretty much for everyone. That's been happening for a while now. And that is cost of materials, the frequency and severity of storms nationwide anyway. Severe convective storms, kind of strong hail, stuff like that. So it's not just hurricanes. So that has been driving home insurance prices up anyway. Reinsurance prices of insurance for insurance companies have been going up anyway, which drives it up as well. What I think will happen, and I don't exactly want to make this call, but there's going to be demand surge, meaning there's going to be a huge demand for building materials, and that is going to push up costs across the country as well. So that'll feed into price. So there's a bunch of upward things pushing on home insurance prices.
I don't know. It just feels like we've had a lot of storms, and I know the season was actually pretty calm until just recently. Then I go look at the S&P 500 Property and Casualty Insurance Sub-Industry Index, and there is such a thing on the Bloomberg terminal. It's up 38% year to date. These insurance stocks are doing well. What's going on there? What's the call?
Fundamentals still good for them. And we expected a busy hurricane season. Kind of new conditions were conducive to that happening. And there was a lot of formation. It's just there weren't a lot of big landfalls. But these stocks, they're defensive, so it's like kind of when you get worried about the economy, they do okay, but then they can also benefit from the economy. So they're a nice play on both of those things. Interest rates going down is less of an impact on them than other financials. It's not great for them. It helped them a lot. But if you have to own financials, they're less sensitive to interest rate moves. So there's a bunch of positives there. I see fundamentals probably peaking. So, we might be at that point, but still good fundamentals.
This might be a really silly question, but do the insurance policies just for homeowners or even small businesses, do they insure the right things for the type of weather pattern changes that we're seeing?
Good question. So,
thanks.
Yeah.
Okay, I thought it was kind of a silly one.
Well, here's the thing is that they do. So they step back. The home insurance industry, it's not like they're raking in profits. It's not like, oh, there's a big flood and we didn't have to pay for it and we're making a lot of money. We look back, so over the past 10 years, the industry has paid out $1.03 for every dollar they've taken in. And that's in losses and expenses. And that's even excluding, storm surge and flood. So it's not an incredibly profitable business to be in anyway. So if you were to say, okay, now these guys have to insure flood, they have to insure storm surge, then the prices of these policies would need to double. So to answer your question, Alex, they're not, but for them to insure everything they need to would be prohibitively expensive.
It's sort of like how I wouldn't have wildfire insurance for a New York apartment, but then we had all that wildfire smoke. Like if that becomes like a common occurrence and it messes up with, I don't know, whatever things you have in your house or apartment, like that's different. Anyway, just I think.
Did Warren Buffett go into the Florida insurance market in the last several years, and was that a mistake with hindsight?
So, Berkshire has obviously vast insurance businesses. Geico is a big auto insurance writer in Florida. In 2023, they made a big bet on the Florida reinsurance market. And that paid off handsomely for them. They could have lost a lot there, but it actually worked out well. We would have to hear from them, but it appears that they kind of completely backed off of that market this year, which turns out to be another good idea. So they'll have losses in there, no doubt. It will not be anywhere near the magnitude that it would impact another insurance company with a smaller balance sheet. So they'll have some losses from this, but last year they made a big bet on Florida that paid off. This year, pulling out that big bet was beneficial.
I didn't know insurance companies could go in and out of markets so quickly.
So in the reinsurance market is easier, right? Like they can reprice on an annual, they can all reprice on an annual basis, but there's less regulation in that market. So they can write or not, anywhere in the world, kind of where they want to.
All right.
All right, Matt, thanks a lot. Really appreciate it. Matthew Palazzoa, Bloomberg Intelligence Senior Analyst, PNC Insurance. We didn't even get to the cat bond market, but apparently there were estimates that those catastrophic bonds would lose as much as 15%, and now that's been repriced as well. So now maybe we're in single-digit losses for that. All right, coming up, it is the big take story of the day. Max Chafkin is Bloomberg Businessweek senior reporter. We're taking a look at Lena Khan. They have plenty more targets if she gets another term, and what Wall Street is saying about that as well. Taking a look at the broader equity market, S&P is still down by just about 0.2%. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
11:40 on Wall Street. We do check markets all day long here at Bloomberg with the Dow, the S&P, NASDAQ off session lows, but still very much in the red. We're looking at a 0.1% drop right now on the S&P, down 8 to 5783, retreating from yesterday's record. The Dow down 93, a decline of 0.2%. NASDAQ down 10, a drop of 0.1%. 10-year 4.07% with a 2-year right now at 3.96%. Gold up $13 the ounce. Spot gold now at $26.20, up 0.5%. And West Texas Intermediate crude surging 2.2%, $74.84 for a barrel of WTI. Underlying U.S. inflation rose more than forecast in September, representing a pause in the recent progress toward moderating price increases. Wells Fargo senior economist Sarah House was interviewed on Surveillance this morning. She said the report came in a little hot.
There was a 1% jump in apparel. You saw an increase in new vehicle prices as well. And so I think when you combine it with services where, yes, you saw shelter disinflation moderate from the big increase we saw last month, you did see other firming in things like transportation services and medical care.
Sarah House of Wells Fargo speaking with Bloomberg's Tom Keene and Paul Sweeney. Sources tell Bloomberg GXO Logistics, that is the supply chain services provider that spun off from trucking company XPO in 2021, is said to be exploring a sale. Right now, GXO is surging by 14.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pell, thank you so much. We appreciate that. Alex Steele and Paul Sweeney live here in our Bloomberg Interactive Brokers studio in New York City. We're streaming live on YouTube as well. Bloomberg Radio Live. That's kind of where you can find us there when you search. I tell you what, in the world of M&A, I'm not sure I'd want to be a banker today. Maybe an M&A lawyer is something. That would be, I think I could bill by the hour and get paid.
Or antitrust lawyer.
Antitrust lawyer, boom. Because this FTC is no joke under President Biden. Lena Khan, who heads this Federal Trade Commission, she is tough, and she is the subject of our Big Take story today. Lena Khan has plenty more targets if she gets another term. Joining us is Max Chafkin. He's a senior reporter for Bloomberg Business Week, and the story does appear in Bloomberg Business Week this week. It's his co-authors, Josh Idelson. Max Chafkin's with us here. Max, talk to us about Lena Khan. Who is she, and how does she view the FTC as perhaps a check on consolidation in a number of industries?
Yeah, Lena Khan's a really interesting figure in the Biden administration, but also as a political figure today. She's very young. She's the youngest ever FTC chair at age 35. She also, she's sometimes described as an academic, but her academic career was very brief. She basically went almost straight from law school to this position, and she became kind of famous for writing this article in 2017, arguing that regulators need to look at antitrust differently, in particular in relation to Amazon. So in the past, most people said, hey, if prices are going down, that's good for consumers. No need to worry about it. Lena Khan argued in this paper that there are other costs of having Amazon dominate so many industries. Cost to businesses, other smaller businesses, cost to labor, and maybe ultimately cost to consumers. And that view has kind of powered this new movement that has scrutinized a lot of the big tech companies. We've seen antitrust actions against, Google and Apple and Amazon, and as well as you're saying, a level of scrutiny on mergers that feels new, that feels somewhat different from the past.
That's so interesting. I love the way you phrase that. So we usually think about it as, does it hurt consumers? And now we're thinking about hurting in a much broader sense. So if we get a Harris or Trump, well, we're going to get one of them. So does that change? Because one can make an argument that I'm sure Wall Street is pressing the Harris camp to also have changes at the FTC.
Yeah, my co-writer on this, Josh Idelson, and I spent a lot of time talking to various, donor types and people who are pushing for various things. And what you learn is that the people who seem to be most vocal right now are sort of centrist Democrats and centrist Republicans. Both of those groups, the kind of who represent sort of what you might think of as like the normal kind of corporate consensus, the way that a lot of people thought about how government should relate to business over the last 40 years or so. They all are kind of against Lina Khan in one way or another. You've seen a lot of angry, very angry Silicon Valley types saying that she's, destroying M&A, destroying the venture capital industry, and so on. And you're seeing that kind of thing from sort of Chamber of Commerce Republican types. Now, where you see support is kind of the squad, the sort of progressive left that likes Lina Khan because she's pro-union. There's also some support from some corners of Silicon Valley, the parts of Silicon Valley that maybe are mad about Google and Amazon being so dominant. And then on the right, you actually see support as well, because sort of like the Trumpist right, the MAGA right, J.D. Vance types, the sort of young Trump supporters who tend to be really mad about tech dominance and also have somewhat populist views on business and on how government should relate to business.
Do we have any idea how Vice President Harris feels about Lina Khan in this FTC?
She has been studiously vague, I would say.
Yeah.
I think the closest sign we have is the price gouging proposal, because Harris announced that she was going to have the FTC crack down on price gouging by grocery stores. That would be an expansion of the FTC's authority. We asked Lina Khan about this, and her answer was somewhat careful and political, but essentially was like, "Hey, I'm open to it." And she made clear, she would like to serve another term. She feels there is a lot of work to be done, and you've seen over the last few months the FTC has been very active. I think they will continue to be very active.
We heard Jamie Dimon speak with Lisa Bromwich earlier this week, CEO of JP Morgan, very much again saying he thinks that CEOs should have a seat at the table, that like half the cabinet should be, probably overdid it, but half the cabinet should be CEOs. And so I'm just wondering how that plays in to an FTC that is more aggressive against company mergers. Like, will there be a relationship to be had?
The most interesting thing to me about the Biden administration has been in years past, I typically cover Silicon Valley, and when Silicon Valley would say, this person is anti-tech, this politician anti-tech, that would provoke a reaction because no politician wants to be seen as anti-tech or hasn't been. And the difference with Biden, and I think to some extent the difference with Trump, is both of them have been comfortable with that. They say, you want to be mad at me, billionaires? Okay. That's good politics. I'm a populist. People tend to like that. And we actually heard that, and there's some quotes in this story to this effect, like, Reid Hoffman speaking out against Lina Khan. There are people on the left who think he is doing Lina Khan a huge favor because he's going to make it very hard politically to fire her. And I think this position, the position you're hearing from Jamie Dimon and from lots of people in kind of the centrist, kind of traditional, corporate roles, I don't know how popular it is politically. The ideas that are on the ascent are really populist ideas, and you're seeing that on both sides.
And it's not just Lina Khan. You look at the Department of Justice, you report in your piece here, they're taking a tough rule against Google, for example, Apple. SEC Chairman Gary Gensler pushing back on crypto. So this is not just a Lina Khan thing.
No, absolutely not. And I think, Jonathan Cantor, who's the head of antitrust at the DOJ, Gary Gensler, he said SEC. Lina Khan has come to symbolize something. And I think that it's partly because of her youth and because of who she is and where she comes from. She's not a conventional Washington figure in any way. And also because you get this attitude that she doesn't care. and that can rub people the wrong way, and I think it does rub people the wrong way. When you talk to business people, they are mad about policy, but they are also mad about tone, and I think that is some of what they're reacting to. But of course, that has a political upside. We saw yesterday AOC coming out really swinging in favor of Lina Khan after Mark Cuban made some comments. He made some similar comments to us that we put in our story, but essentially criticizing Lina Khan. AOC saying it's going to be an all-out brawl if you want to, if anyone wants to remove her. So I think this will be an interesting political issue, whoever is elected in November.
All right, Max, thanks a lot. Really appreciate it. Max Chafkin, Bloomberg Businessweek senior reporter. This is the Big Take piece. You can check it out on Bloomberg Businessweek and also Big Take on the Bloomberg Terminal. Really good stuff. It's going to be so fascinating. And if you're CEO, do you want to get into the M&A line and just kind of wait there? Or do you want to wait and see what happens after November and what happens to Lina Khan? Like, what's your strategy,
Yeah, it seems like we talked to Jen Rhee, who's the antitrust trust analyst at Bloomberg Intelligence, seemingly almost every week, about every deal that gets announced, we got to go to Jen Rhee and say, are these regulators going to let this thing go?
Who's busier, George Ferguson or Jen Rhee?
Exactly.
I don't know. I think it's a toss-up at this point. All right, much more coming up. We're going to talk about how Wall Street pros are avoiding election bets because the race is still too close to call. And even how do you bet if you wanted to, and how much all of that costs. Natalia Knežević is Bloomberg Equities reporter. She'll be joining us on that story. This is Bloomberg Intelligence. Happy Thursday, everybody.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Thursday, everybody. Happy Friday Eve. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We're broadcasting to you live from the Interactive Broker Studio right here in Midtown Manhattan. So we all know that the presidential race is way too close to call. Uh-oh.
I want to do a little Hispanic Heritage Month.
Oh, no.
Yes.
I'm sorry. I messed it up.
It's all right. I got you. I got a 5 on my AP Spanish exam
Yeah, all
in high
right.
school, but I still can't speak a lick. It is Hispanic Heritage Month, and every day at this time we are celebrating significant moments in Hispanic heritage. Now with your installment for October 10th. Here is Bloomberg's Sebastian Escobar.
On this day in 1868, a wealthy sugar mill owner by the name of Carlos Manuel de Céspedes freed his slaves and then declared Cuban independence from the Spanish government ruling Cuba. This act commenced the start of the 10 Years' War, which ultimately ended with a surrender to the Spanish, but was still an integral part of Cuba's fight for independence. The events that began in 1868 eventually led the way for Cuba's abolition of slavery 30 years later, and with the Spanish eventual defeat in 1898 as part of the Spanish-American War. The U.S. did maintain a military occupation on the islands for a few years, and on May 20th, 1902, the Republic of Cuba was created. but it is on October 10th where Cubans celebrate their official Día de la Independencia, Independence Day, largely in thanks to their father of the country, Carlos de Céspedes. That's Today in Hispanic Heritage. I'm Sebastian Escobar, Bloomberg Radio.
All right, thanks so much, Sebastian. I'm glad we made room for that. Everyone told me, and then it just went clear out of my head. Anyway, so back to the story I was originally talking about, which is the U.S. presidential election. We all know that is going to be a super close race. So how do you wind up betting on it? How do the pros bet on it? Should you even be betting on it? Bloomberg's Natalia Knežević joins us now. They have a great story out with Isha Day that Wall Street pros are avoiding those bets because it's too close to call. Dumb question. How do you bet on a U.S. election right now? Like, what are the poll? Like, where do you do that?
Yeah, so there are a couple of trades that investors are keeping in mind. So, for example, quite recently, last week, UBS trading desk came up with a note, and they said the Trump trade is back. So they have baskets that trade specific stocks. People can buy those baskets. They can buy specific stocks. And, for example, UBS said that now with Trump trade is making a comeback, some possible trades are financials, downside exposure to Chinese stocks because Trump is more tough on China, and of course energy, but it's like you can go long on traditional oil energy producers and short renewables, or if Harris trade picks up the pace, it could be the opposite.
Again, I'm like Alex. I'd have no conviction either way here. I mean, do you talk to people out there in the marketplace that have greater conviction than maybe the polls would suggest?
It's really just because we were so prepared to cover election from the market's perspective, and it's really hard to do that because this time around it's really different. So look at hedge funds positioning. Usually they tend to sell stocks before the election. That means that they want to have more cash on hand ready because stocks move sideways, they can go long and short. This time, Goldman's data shows that exposure is still really elevated versus historical levels. That means they don't want to sell stocks. And a few reasons behind that. Economy is still doing fine. The Fed is easing its policy. Earnings are still resilient. So they just don't want to sell stocks when they can possibly go higher.
Well, it's also so interesting because you mentioned the Trump trade being long energy and then short renewables, and that was exactly the opposite of what actually happened when Trump was president. So, like, even though the policies may point one way for the equity market, it actually winds up changing. Remember, if you have favorable oil policies, they're going to, drill more oil, and then oil price goes down, and then the energy stocks also fall. So it's just not necessarily a one-for-one when something along that happens. So how are prime broker, how is the data shaping up in terms of positioning?
Yes, so we also see that the options market probably would be the most obvious way to track positioning. And we see that volatility is also elevated. However, some people who track this market really closely, they say that only 2 points of the VIX can be attributed to the election. The rest is other risks like geopolitics and stuff like that. So people are betting on the VIX curve as they expect volatility will move higher, or some specific options on, again, single stocks or ETFs around elections.
My strategy, I'm going to go with the strategy that says the Congress is going to be split. Nothing's going to get done. Don't worry about it. How about that?
I mean, that's a fair one. But there are tariffs that can be put on regardless. So that could be executive actions versus, say, what you have to go through Congress.
I'm also a believer that tariffs are just a tax on the consumer.
Right. But then in that case, if you do wind up having tariffs either way, then that's going to influence, how does that wind up informing how you trade?
All right.
Okay, before I let you go, Natalia, what are the pros saying right now in terms of, say, the funds, like CTAs, the volatility funds, what's their momentum right now?
Momentum is really negative. We see that short-term funds like CTAs, commodity trading advisors, they have really, their exposure shifted to the downside. That means that they are expected to sell stocks even if the market moves higher. And of course, if it moves lower, selling can be pretty aggressive. And vol control funds, that track volatility, they are supposed to sell more stocks because VIX is still really elevated. So lots of risks.
Oh, I got a VIX at 20. I can live with that.
VIX at 20. I mean, the 20 moment is a thing, right? Yep. A little elevation there. All right, Natalia, thanks a lot. Really appreciate it. It was a great article. You guys should definitely check it out on the Bloomberg. Natalia Knežević joining us, Bloomberg equities reporter.
Pronunciation. See,
I don't actually know if that's true.
Oh, it's Perfect.
I definitely know, A, that you weren't doing it.
I was not doing it.
I could sense the punt. And B, I could be saying it relatively wrong, but I'm still just going to own it. But I also said like half our guest names wrong today. So
No, Alex practiced so many times.
I
so
did.
yes.
I did. I've known Natalia for a long time, so I want to get it somewhat right. Okay, we get Friday tomorrow. We are counting down to the election now, I
And we got
guess?
earnings tomorrow for Jamie Dimon.
Oh, right.
JP Morgan
Duh.
Chase.
We got big banks. I undersold it. Okay, balance of power up next. This is Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
The threat to safety is still very real. Welcome to the fastest show in politics as Hurricane Milton moves across Florida and into the Atlantic, leaving millions without power and floodwaters that still pose a significant risk, even as the state avoids a worst-case scenario. We'll get the latest from Bloomberg weather reporter Lauren Rosenthal with an on-the-ground view from Democratic Congresswoman Kathy Castor of Tampa. She has no power, but she'll be on the line with us in just a moment here on Bloomberg. It's CPI Day. We'll put all this together with our signature panel, Jeannie Shanzano and Rick Davis along for the ride. And we start, as always, with a look at Wall Street. The market's keying off that important inflation data. Charlie Pellet has a look for us. Hey, Charlie.
Indeed, it is CPI Thursday, Joe Matthew, and we have got stocks trading mixed. The key takeaway, NASDAQ has moved higher since our last update, looking at a 26-point gain right now in the NASDAQ Composite Index, up by 0.1%, reversing earlier losses. S&P now little changed. It is down just 2 points. We've got the Dow down 69 right now, a drop at midday of just about 0.2%. Russell 2000 Index of small cap shares down 0.8%, but again, NASDAQ pushing higher by 0.1%. 10-year at 4.07%, with the 2-year right now 3.96%. Gold up $17 the ounce to $26.25, up 0.7%, while West Texas Intermediate crude oil is now up 3%, $75.46 for a barrel of WTI. So what about the U.S. presidential election, the possibility of higher tariffs, and the U.S. stock market? David Kelly is Chief Global Strategist at J.P. Morgan Asset Management.
It looks to me like most likely we're going to end up divided government. I mean, of course we might not, but that looks most likely. And then you don't get big fiscal policy change because one house of Congress tries to, offset what the administration is doing. But on tariffs, the president has control. And if we engaged in a big tariff war and we sort of put 10% tariffs on everybody and then they retaliate and we say, we're going to go 20%, that's the kind of thing that could actually cause a stagflation recession.
J.P. Morgan's David Kelly interviewed this morning on Bloomberg Surveillance. Ethel Kennedy, the widow of Robert F. Kennedy and a mainstay of one of America's most famous and star-crossed political families, has died. Ethel Kennedy dead at the age of 96. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Balance of Power continues. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, thank you so much. We'll get back to Charlie a bit later on this hour, see how the markets are behaving. Yes, on this CPI Day, welcome to the fastest show in politics. This is kind of like the old days. Remember the fastest hour in politics? That's what we have today, as we hand things off to our colleagues a little early today at Bloomberg Business Week. It is the 10th of October, and we're tracking Milton along with the candidates here, as always. The president getting his daily brief today and being briefed throughout the day on Hurricane Milton, with the storyline here. Could have been a lot worse. Certainly, according to people on the ground, there are still a lot of issues to deal with, though. More than 3 million people without power, a storm surge that has left floodwaters in many places contaminated, a real issue today as rescue crews start their work here. The storm is blasting out into the Atlantic, and we have Lauren Rosenthal back with us, who's been an indispensable voice since we first heard the word Helene. Now we've added the name Milton. She is Bloomberg's weather reporter, and Lauren joins us from world headquarters in New York. So it's made its way across the state here, Lauren. How would you describe the impact of this storm?
We knew that there would be a lot of water and a lot of flooding from Hurricane Milton, and that has definitely turned out to be the case. While storm surge estimates are still rolling in, and it's going to take some time because, readings are difficult to confirm. They'll have to get crews out to look at high water marks on some buildings. It looks like surge was about 5 to 8 feet in the Tampa Bay area. That is a lot of water, has caused a lot of localized flooding, and we also saw record-breaking one-day rainfall from Hurricane Milton yesterday. More than 18 inches of rain fell at an airport in St. Petersburg. That beats the existing record by more than half a foot. So there is a lot of water. It's complicating efforts to get to people, to see how communities are doing, to try to start assessing the damage and then figuring out where to go next.
To see the roof torn off Tropicana Field was pretty remarkable, some of the optics here. But the narrative, and you can tell me if this is even fair, Lauren, is that the state managed to avoid a worst case scenario. Is that true?
That's definitely what we're hearing from, I think it was Governor Ron DeSantis said that at a briefing this morning. There was the potential for significantly higher surge. There was a real concern that Tampa Bay would see its first direct hit from a landfalling hurricane in more than a century, which would have caused catastrophic damage, in a region that's home to more than 3 million people. The storm hit slightly further south. Obviously, as some emergency managers told me even before landfall, if Tampa is spared a direct hit, it is still really bad for someone else. And I think that's still what we'll be seeing over the coming days. This is going to be a complicated recovery, especially on the heels of Hurricane Helene just 2 weeks ago.
Understood, and it's a really important point that you make. The National Hurricane Center says, as of at least the update 1 hour ago, that Milton could still cause, quote, considerable urban flooding, unquote, in some areas as additional rain falls on a swath of the state between Orlando and Jacksonville. Lauren, how worried should we be about what's left here?
I definitely think, the risk is not over. Milton is a very large storm now. Its tropical storm force winds extend for more than 300 miles. So even though Milton's eye is close to pushing back out over the open ocean, its winds and rain are still going to leave lingering effects for the eastern coast of Florida. They're definitely not out of the woods yet. The Hurricane Center is advising people to please pay attention to local flood warnings, to be careful with those winds. 80 miles an hour right now, top sustained winds and higher gusts possible. That's definitely not something you want to take lightly.
Thank you so much, Lauren. Lauren Rosenthal, Bloomberg weather reporter, doing great work for us here to keep tabs on this storm. It's not over yet. A boil water notice issued, I see clearly here in St. Petersburg, due to water main breaks from Hurricane Milton. A citywide boil water notice is now in effect for St. Petersburg, Gulfport, South Pasadena, Leelman. This is the case around a large swath of the Gulf Coast of Florida where clean water is going to be an issue. A lot of the floodwaters have been contaminated by sewage. So we've got a power situation, a water situation for at least those who have been left behind. And they include Kathy Castor, the Democrat from Florida's 14th district. The Congresswoman was with us ahead of the storm and is back with us now on the line, having lost power with more than 3 million people out. Congresswoman, I thank you for making the time to talk to us today in the throes of the recovery of this storm. Can you just give us the lay of the land where you are now?
Yeah, thank you, Joe. This is a harsh double whammy. Hurricane Helene, then Hurricane Milton within 2 weeks. So we're grappling with the short-term challenges that you've mentioned: power outages, fuel shortages, critical infrastructure, water and wastewater that need to be repaired. But I'll tell you, the long-term economic harm to our way of life in Florida also is going to be critical. We're already suffering a property insurance crisis. We pay the highest rates by far than any place across the country. Electric bills have been out of sight, and this is the new abnormal, I'm afraid, because of extreme hot temperatures, an overheating Gulf of Mexico. It's my fear that this will become routine. So what I'll be looking for in a disaster supplemental in Congress is safeguarding taxpayer dollars. Build it when we build back, do it in a more resilient way, do it in a smarter way. For example, MacDill Air Force Base is a critical economic engine here. They've had some flooding. How do we safeguard the missions at the base? Same thing for our Coast Guard Air Station in Clearwater. And then the city of Tampa, Pinellas County, all of our water and wastewater rebuilding. We're going to have to be smarter about how we do it.
Well, that's you just said a lot, Congresswoman. I want to unpack some of the things that you just said, if you can bear with me through a couple of questions here. We understand that swift water teams were active overnight and have continued with water rescues this morning. Do those continue now, or are we getting beyond the rescue phase of this operation? I think we may have lost the Congresswoman. Can you hear me? Congresswoman Castor?
I can hear you now.
Got you. Are there still water rescues underway now? We know that swift boat teams were out overnight.
Yes, there are. There's one assisted living facility in North Tampa near the University of South Florida where they are sending school buses over to get folks out. Because this was much more of a rain event, there are places that maybe they didn't flood during Helene. That was a coastal flood surge event. So this is a real double whammy. And the first course of business is making sure everyone is safe. That's a saving grace. They went to shelters. They left the evacuation zones, and I think that's why the loss of life is going to be minimal here in the Tampa Bay area. But I really feel for the folks who had to deal with these outrageous tornadoes on the eastern side of the state.
Yeah. It's very scary stuff, Congresswoman. We're showing our viewers images of Tropicana Field, which is now convertible after last night. We saw actual rainwater on the grass in the park here. You mentioned people in shelters. There are more than 70,000 in government shelters now. That stadium was supposed to be one of them. Does Florida have room for everyone?
We do. A lot of our public schools are converted over to shelters, but I think a serious long-term issue will be the tens of thousands of my neighbors who were flooded out by Hurricane Helene, and where are they going to go? They have all of their lives out in their front yards. They try to collect as much debris, but where are we going to house them? And thank goodness FEMA is here delivering the disaster aid into people's bank accounts that they need. I've heard of thousands of dollars going into people's bank accounts to make sure that they can relocate, pay rent, and get the assistance they need.
Well, that's awfully important based on some of the misinformation that surrounded the response to Hurricane Helene. You can tell us then that FEMA is on the ground and is active now on this day after the storm.
Yes, they were active in the days after Helene. Team Administrator Dan Criswell was here last week talking with Mayor Castor of Tampa, Mayor Welch of St. Petersburg. She's going to be back. President Biden is checking in with all of us, Vice President Harris. This is an unprecedented response I've seen by FEMA, the largest mobilization in recent history, and we're going to need it. We're going to need everyone's help to rebuild and do it in a smarter way and take care of our neighbors.
We're spending time talking with Congresswoman Kathy Castor, who represents Florida's 14th district that includes the Tampa Bay area. And she's on the phone right now because she has no power, like 3 million other people in that part of Florida. Congresswoman, you mentioned funding for FEMA. We understand the agency does have enough money for the individual assistance program, but there are some worries about the SBA not being able to help businesses turn the lights back on. You mentioned the possibility of a supplemental or an emergency request, and I saw a posting on Twitter from your Republican colleague in the House, Anna Paulina Luna. Of all people, Congresswoman, it looks like she's working with President Biden here. She says he is personally overseeing that FEMA does not create problems with debris removal and is supportive of $15 billion in FEMA funds only for hurricane victims. It sounds like the Florida delegation is working with the administration on this. What can you tell us?
It is going to take a bipartisan cooperative response to get the disaster supplemental that we need. I don't think $15 billion is going to cover everything that we're going to need for Florida, Georgia, South Carolina and North Carolina especially. But
Okay.
yes, we're going to need those SBA funds. They're very important for businesses and individuals to rebuild over the long term. And then all of the critical water, wastewater infrastructure is going to have a price tag to it.
Anna Paulina Luna writing on X, Congresswoman, this needs to happen. Speaker Johnson, call us back. Is that the case? And have you heard from leadership about this yet?
I haven't heard from Republican leadership, but I just got off the phone with the lead Democrat from Rosa DeLauro of Connecticut, who is asking for us to be working with our local and federal partners to track of the harm and the damages here so that we can get things rebuilt as quickly as possible. But this is going to be job one for the Congress when we come back. And it's and as I said, if we're going to safeguard the taxpayer dollars, we have to rebuild in a more resilient way in our energy systems, our water systems, and where we allow development to.
Hopefully you're still with us, Congresswoman. I know that there's a lot of demand on the cell phone infrastructure in Florida right now without power especially. Can you still hear us, Congresswoman?
I can.
Okay, great. I'll ask you lastly, and you've been very generous with your time, that there was an executive order issued by Governor Ron DeSantis allowing election supervisors to consolidate voting centers or relocate them if they're flooded or destroyed, easing some rules as well for mail-in ballots. Is enough being done to help people access ballots as early voting continues ahead of November?
This is going to be a primary focus, Joe, because in Hillsborough County, vote-by-mail ballots arrived in mailboxes last Saturday. So if you had been flooded out of your home, like tens of thousands were during Helene, I'm not sure you received that ballot. So we're going to need a lot of flexibility. But right now, I think it's making sure everyone is safe, and then there'll be plenty of time for elections. But we'll need that extra time and extra flexibility for sure.
I can't thank you enough for giving us your time, Congresswoman. I'm sure you're hearing not only from constituents but family and friends, and I appreciate your time today. Kathy Castor, Florida's 14th district, of course, right where the hurricane went through in the wee hours of this morning, late last night, in fact. Congresswoman Castor has no power, which is why she was on the line with us, and we appreciate the insights here. I'm Joe Matthew in Washington. Glad you're with us today on Balance of Power as we gauge the aftermath of this storm, the political impacts, of course, the economic impacts as well on this CPI day. There are some concerns about the potential for inflation in things like fertilizer and other items that are made in the storm path. I will mention as well, the White House has just added some remarks from the president, who's being briefed, we're told, throughout the day today from FEMA officials. 2 p.m. Eastern time, Joe Biden will deliver remarks on the initial impacts of Milton. I'm just reading directly from the White House schedule here that was just released. He will talk as well about the ongoing support to state and local officials. We'll do that from the old executive office building next door, across the driveway from the West Wing. We'll have ears on that for you. Our panel is on the way in next. Rick Davis and Jeannie Shanzano, this day after the storm, on the fastest hour in politics. Glad you're with us. I'm Joe Matthew in Washington. This is Bloomberg.
Street. We do check markets all day long here at Bloomberg. Developing story just getting headlines right now on the Bloomberg Professional Service. A U.S. Department of Justice prosecutor says Toronto Dominion Bank, TD Bank, Canada's second largest bank, will plead guilty to money laundering charges. The prosecutor says two of the bank's U.S. subsidiary units intend to enter the guilty pleas. Stocks are now trading mixed since our last update. The S&P now higher. We've got the NASDAQ Composite Index also advancing after earlier declines. The Dow, though, does remain in the red, down 17, a drop there of just under 0.1%. So the S&P little changed, up 2 points. NASDAQ now higher by 31, a gain of 0.2%. This morning, we got data showing hotter than expected inflation and a slowdown in the labor market. The 10-year, 4.07%, with the 2-year, 3.96%. Our Molly Smith will have a whole lot more on markets coming up in just a moment. Spot gold up 0.8%, 26.27 the ounce, and West Texas Intermediate crude surging now by just about 3%. WTI 75.44 barrel. Tesla's big reveal happens tonight. The stakes are high as investors eagerly await the first look at the company's fully self-driving vehicle. Again, Tesla shares, they are trading higher right now, up by about 0.1%. So again, recapping, the Dow Jones Industrial Average down less than 0.1%. S&P little changed, also up by just about 0.1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcast. Balance of Power continues. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, thank you so much, sir. We'll get back with Charlie a little later on this hour. We do it like this every day around here, the fastest show in politics with an eye on the markets, and frequently these stories collide, and it has happened again. Today, it's CPI Day. Charlie Pellet with the deep tease. Yeah, Molly Smith is coming in. You heard the words he said, higher than expected. And that's kind of all you need to know today. If you were paying attention to that jobs report last week, now everybody, all the naysayers have a little more grist for the mill. And yes, Molly Smith with us after an early morning editing the copy here on the terminal and online. She's Bloomberg's economics editor. Molly, it's great to see you. You connect the dots, and you know, as journalists, we like to try to reach for a trend. And this is pouring a little bit of cold water on the idea of winning the war on inflation. But is that the case, or does it simply remind us that this doesn't move in a straight line?
Exactly. That's more the takeaway, that this is going to be a bumpy path. We actually just heard New York Fed President John Williams describe that there are going to be, quote, wiggles along the way. I thought that was a fun way of describing it. So it's not a straight line down. But that said, it does seem to be that the fundamental drivers of disinflation are still intact. And we got good news on that front, at least in today's report, showing that shelter costs, I mean, that's really been the big one holding back the bigger progress, that housing costs did moderate in September. So that was very welcome to see. But of course, you don't like to see the things that flared up. You know, car prices were a big one. Also saw apparel, car insurance, stadium admissions for sporting events that tied in with the start of the NFL season. So yeah, definitely a lot of things there that I think economists seem to be painting more as one-offs and not so much the big drivers of what's going to bring inflation down.
Okay, so that's good. We're not going to freak out today. What did we learn about shelter prices this time? I know that's something you've been watching closely.
Definitely, yeah. This was really welcome to see that shelter was up 0.2% on the month, and that's compared to 0.5% in August, so a really big step down there. The thing is, though, a lot of it was by hotel prices, which can be really volatile from month to month, and people had actually been expecting hotel prices to go up in September, and to see them fall was quite a big surprise, so that dragged down the overall shelter measure. But the thing that you really want to look at within shelter is how people are, you know, their actual housing costs, not just the hotel stays. So those ones were definitely more tame, those rental measures. So that was definitely good to see today.
So the next question, of course, needs to be about the Fed, right? I was looking at writing from our colleagues at Bloomberg Economics, Anna Wong and Stuart Paul. Despite the upside surprise, they say, and this kind of echoes your point, we do not think the report will alter the FOMC's view that inflation is on a downtrend trajectory. So what does that mean for rates going forward?
So it looks like, based on the trading in the market today, that there's just more conviction for the November meeting to be a 25 basis point cut, which was already moving in that direction after the strong jobs report last week that you mentioned. Honestly, I was thinking there might be a bit more argument that there could be, some debate as to whether there's a pause after these latest two data points that came in pretty strong. But you also had jobless claims today rise to the highest level in over a year. Definitely reflected some weakness from Hurricane Helene in there, with claims in North Carolina very high, but also a lot in Michigan. So might be some more going on in the manufacturing sector there.
Gotcha. Great to talk to Molly Smith, as always. People get all worked up at 8:30, right? You start calling in trades. Everyone freaks out. Then you talk to Molly. You're reminded the sun will come up the next day. Thank you, as always, Molly Smith in New York, Bloomberg Economics editor. As I remind you now, this is all we're going to get. This is it. September Consumer Price Index report is the last one before the election. And for that matter, before the next Fed meeting, which is, at least it begins, the day after the election. Our signature panel is with us on this important economic day. Rick Davis and Jeannie Shanzano are here, of course, both Bloomberg Politics contributors. She is political science professor at Iona University. He is a partner at Stone Court Capital. So it's an interesting moment here, Jeannie. This is all we're going to get. There's no more debates. Donald Trump said just yesterday he's not going to do it again with Kamala Harris. And we're pretty much all out of the big economic data. Is it time to start closing arguments?
Well, and he not only said it, Joe, as you know, he said it in all caps. So I guess that means he really
fair enough.
Time. No debate. Maybe he'll change his mind. But, I think, they are making something of closing arguments, but you just got to underscore how important the news is today and the economy is overall. I was really struck by the latest Gallup poll, which said that is the issue 52% of Americans agree on as the most important issue, describing it as extremely important. Another 38 saying very important. So you're up in the 80% plus range of Americans who say the economy is it for them when they go in the polling booth. And so what that means is in these closing statements, so to speak, they better be focusing, Harris and Trump, on the economy and what their plans are. That has got to be the number one issue that they talk about. And so far, I think the two of them have done that to a certain extent, but you can't do it enough. So they've got to get on this economic policy bandwagon.
It's a very important point that Jeannie makes here. That Gallup poll out yesterday finds the economy is the number one issue for both Republicans and Democrats. A majority of voters put them together, 52%. With a pretty stark partisan divide, Rick, on the way you look at the economy. Based on all the data now, we've got what we're going to get. The snapshot of the economy on the eve of this election favors whom?
Look, I think that it favors those who, looking through the prism of who you like for president. As you point out, if you're a Republican, you think the economy is horrible. If you're a Democrat, you think the economy is great. Now, it helps that the news today, for instance, on CPI is pretty good. It helps that this week we've had a record, run up in the markets, and so consumer attitudes are improving. But I would say, if you're the Biden administration, if you're the Harris campaign, you wanted to have seen a lot more improvement in these metrics by now. How much of this is going to seep in between now and Election Day? I really question, because you have a lot of people voting today. They're voting on the economy that they woke up to today. And so do they feel better about it than they did 4 years ago under Donald Trump? And I do think one of the unique things in this election is Donald Trump left office in 2020 with a 35% approval rating or something near there. Today, he has a 50% job approval rating as president. So people have forgotten what they didn't like and have focused on what they liked. So that's as much of what they're battling as the economy itself.
So what do you think, Jeannie? The S&P 500 hit its 44th record high of the year yesterday. When you listen to what Rick Davis just said, think about the broad snapshot on the economy, knowing the different ways that D's and R's look at that. You can't argue the 44th record high on the S&P 500. To what extent does the wealth effect from this market help the incumbent, if at all? Wall Street seems that at least there's a narrative that Wall Street favors Donald Trump because of a lower corporate tax rate. But is this something that the Harris campaign needs to start highlighting in the closing hours of this campaign?
Oh, absolutely. You know, I will go to my grave, hopefully not soon, so to speak, saying that September 18th was the best day for Kamala Harris and the Harris campaign because of the drop in interest rates. Those macroeconomic numbers help them. They need to talk about them, and they need to keep talking about them. But the reality is they also have to understand where people are when they go to the grocery store and go to get gas, and the costs are high. And so they've had this really difficult challenge as the incumbent, so to speak, of walking that line. And I thought that's why what Kamala Harris started to do on The View the other day is something that she should do all the time, which is keep introducing new economic policies. In this case, she was talking about how to help the, you know, about 100 million Americans who are trying to care for elderly people in their homes. Now, whether that is economically sound, I have some questions about, and of course it got overshadowed by her hugging of Joe Biden. But that aside, she needs to be putting out these economic ideas, and she needs to stick with them, and she needs to talk about this, at these macro numbers that look good for them, and keep talking about how she's going to do things better than Joe Biden did or differently as it pertains to costs, especially
I don't know
housing.
who's keeping track. I understand, Jeannie. I don't know who's keeping track of all these proposals on the daily, though. You mentioned that one from Kamala Harris 2 days ago, right, involving support for home health aides. Rick, last night, Donald Trump dropped another one, no income tax on expats. We're the 10th of October. At what point does the window close on new proposals? How much more room do people have in their brains for this?
Yeah, I think the window closed a long time ago. I mean, you hit it, Joe. I mean, politics is about repetition. There's going to be no recall. If I took a poll today and asked people, you know, what have you seen, read, or heard about these campaigns lately? And you asked Donald Trump supporters, you know, what they think, and they're not going to be able to repeat any of this stuff. They heard it one time. That's why you do advertising over and over and over on the same issue, because it's hard to get through to these voters. They got a few distractions in places like Georgia and Florida and North Carolina. You know, and so this is an incredible mistake that both campaigns are making, that in the last, 4 weeks of the election, they're introducing new ideas into the voters. It's only going to add confusion. Kamala Harris is fighting yesterday's battle. Yesterday's battle was, you're not detailed enough. We don't know your proposals. She's done as much as she could do on that, and now's the time just to reinforce.
Advice from Rick Davis and Jeannie Shanzano. I hope they're listening. I know they like to get this program whenever they can, not just on the radio, but on YouTube, where you can find us now. Search Bloomberg Business News Live, because we're not done with our panel. Coming up next, a lot more with Rick Davis and Jeannie Shanzano and the politics of a hurricane. We've just had another set of remarks added by Joe Biden. He's going to address the nation coming up in about 90 minutes with the initial reaction, the response to Hurricane Milton. Avoided the worst in Florida, but they're still dealing with a very dangerous situation, as we heard from Congresswoman Castor early this hour. We'll have much more ahead on Balance of Power. This is Bloomberg.